This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Help me, Paul. I remember how to do this. I took an Uber today. I guess it didn't work out.
No, it didn't work for the quarter.
Uber.
Stock down 10% pre-market trading. Second quarter bookings outlook midpoint misses estimates. I mean, I don't know. I mean, I think people are using Ubers as much more than they ever have. I don't get it.
I don't get it either. I look at the fee they're charging. Well, here's the arch question as we start the show this morning. If they raise the price of a given Uber $4 or $5,
Boom.
Would anybody say,
No.
no, I'm not going to take it, I'm going to take a cab, or,
No.
this, that, and the other?
No.
I don't think so. I just don't get it.
But
Good morning.
what I do is I arbitrage it. I go Uber and Lyft, and I take the lowest price. Matt Miller does not do that. He just goes Uber. He has brand loyalty. I don't have any brand loyalty. I just pick Lyft, Uber. And I did that this morning. Whichever one has a cheaper one, I go.
There you go. I took Lyft this morning. Good morning. The Bentley was in the garage.
Sure.
Good morning, everyone. Tom Keene and Paul Sweeney. We're trying to remember how to do this after a few days off. We welcome all of you. Huge economics today, and of course the equity markets front and center. As I mentioned, Brian Belsky with BMO with us. He's a bull. He'll be with us in the 9 o'clock hour. Emily Roland from the John Hancock Company, Boston, Massachusetts, and the vice chairman thrilled that Richard Clarida will darken the door in the 9 o'clock hour. This morning, John Tucker's going to help out here with the data checks here in the Bloomberg Business Flash in a moment. We're in the Interactive Broker Studios on Apple CarPlay, on YouTube, Bloomberg Podcast. Paul,
Yep.
I got the statistics from Google.
Okay.
Emily Chang interviewed the CEO. She said Tom Keene needs the statistics.
We need to see them.
Thank you, Google, for sending me the mathematics on YouTube. And I'm just beyond humbled, folks. I can't tell you that the amount of time spent listening for me and Paul and the team is just sobering. We know it's because of Michael Barr.
Of course.
It's really the reason it's happening.
Tigers.
Anyways, in the Interactive Broker Studios with our Bloomberg Business Flash, John Tucker.
All right, after the parade of earnings continuing, we have futures right now indicating a lower cash open on Wall Street. Let's go back to Uber Technologies, all over the place right now. Down 6.3%. First quarter gross bookings, as you mentioned, missing estimates. We did get Lyft after the close of regular trading of those shares in the pre-market. They're up right now almost 5%. Also coming across the tape right now, Shopify, the first quarter revenue, $1.86 billion, and that beat estimates there. Overall, again, as we say, the S&P futures, they are down 5 points right now. That's down 0.1%. The NASDAQ futures, 22 points lower. The Dow futures right now, they are unchanged. Looking at Europe, European stocks extending their gains this morning, rising to a fresh record. The FTSE in London up 29 points right now. That's a rise of 0.4%. The Europe Stock 600 up 0.4%. And as we look at treasuries right now, the benchmark 10-year yield up 2 basis points. This is at 4.47. The 2-year yield, which is more policy reactive, unchanged at 4.83. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Welcome back, Tom.
John Tucker, thank you. With us now, let's get started, jump in the bond market, in clipping coupons or total return. Kathy Jones joins us from Charles Schwab. Let's start with first principles. Are we clipping a coupon forward, or is it going to be about actual total return?
I think there will be opportunities. There are opportunities for total return in addition to clipping the coupon. Coupon's not bad when you're in the 5.5%, 6% area. But I think there will be some opportunities for capital gain as well and getting that total return.
So, Kathy, do I sit there? I mean, I'm looking at my screen right here. I can get a 2-year Treasury, 4.83%, close to 5%. Is that the trade, or should I take some credit risk and go out and think about some of the credit returns I can get?
Yeah, we've liked investment grade corporates for quite a while now. The spread versus treasuries is very low.
Right.
But that reflects a good equity market, a resilient economy, and a lot of confidence in the ability of companies, the bigger companies, to have the cash flow to pay their shareholders. So I'm not too concerned about that. I think the opportunity going forward in corporates is not as great as it has been because that spread probably can't tighten as much. But again, you're talking all-in yields that are very, very attractive.
I look at chart. What I do, folks, is I really steal from everybody I can, including Kathy Jones and Liz Ann Saunders. And somebody gave me yield to worst, the global yield to worst index. And it's basically back to where it was in 2000, higher yields, obviously. If it's price up, yield down, are we still in a bond bear market?
Yeah, that's a great question. I don't know that we're in a bond bear market, but I also don't know that we're in a bull market at this stage of the game. I think
I agree with that.
We're going
Continue.
sideways. I think we're going sideways here for a while. But I think that gives us a lot of trading opportunities, and that's where that total return comes in. If you're an active manager, this is a really nice environment.
Yeah, but what about a slug retiree? I mean, Sweeney's on his desk with a laptop opening, trading leveraged ETFs in the bond market. If we're not trading, what do we do here? And the answer is you buy the coupon.
Yeah, and the coupon's great right now. We haven't seen coupons like this in 15 years or so. So if for an everyday investor, you either buy a bond fund with a nice yield to worst, I guess, on the underlying, or you go and buy some individual bonds and lock in those cash flows.
So Kathy, I'm looking at on my Bloomberg terminal, INGO. That gives me the Bloomberg Index browser. Shows me how the credit markets or fixed income markets are performing around the world. The only green I see in the U.S. is high yield year to date. And last year, the only green was high yield. I mean, it looks like the market's happy to take some serious credit risk out there, despite calls about maybe a recession or something like that. What's going on in the high yield market?
It's the coupon. It's the power of the coupon. You're getting those yields that are 7%ish or so, maybe a little bit higher, and that can be offsetting any price decline that might come in. And you also see the tightening spread, and I think that just as the equity market is doing well because there's a risk appetite out there, you're seeing people go into high yield because there's a risk appetite. The other thing is, what we've seen in some of the market is either private debt taking some of these, before you get a default and a full bankruptcy, you're seeing kind of the private credit folks step in. So you're not seeing the default rate move up as much as it might.
Paul, you've been way out. A victory lap for Paul Sweeney on this. You've been way out front on this. And in Business Insider published last night was not a devastating, I don't want to editorialize, but a lengthy article on the private debt of the Blackstone real estate investment
extraordinary
trust.
Yeah.
And I just want to say to everybody, Sweeney's been like 2 years ahead on this.
Love the private credit business. I should be doing that now if I came onto the street. So again, are there sectors that you like here versus that maybe your team is not focused on? What are some of the sectors you like here in maybe investment grade or even high yield?
Yeah, we actually simply want to make sure that we're in a diversified enough portfolio when you come to the corporate market. Consumer discretionary may be a little less positive than some of the others. Materials look okay to us, but in general, just making sure you have enough diversification within the portfolio is important as well.
I think it's like my chart of the year here. I'm going to explain a chart on radio. Folks, that really works out. I'm going to take this yield to worst chart. I take it back to 1990 rather, not Paul Volcker. And I've got the great moderation, total return, bill gross, price up, yield down. Everything's great. I'm out 6.5 standard deviations. The yield has exploded higher. It's like a medical chart. It's not like a finance chart as well. Now, you said we're in a trading range around here. I'll take you on that. It's been a year or two. Do you have any vision of a return to the great moderation if real yields come in or the Fed comes to the rescue?
Yeah, I think that we can get lower yields from here, and not back at the financial crisis lows or the pandemic lows by any means, but we can get lower yields here. I'm not sure that we're in a world where we're going to see this return of excessive inflation or a big risk premium for inflation, as it has gradually moderated and looks like it's going to continue to.
What a great brief. Kathy Jones, thank you so much. With Charles Schwab, thrilled to have her in here. With where's the Sweeney yield? The 2-year, I'm relearning the screen, folks. 4.84% on the 2-year yield. That's down nicely from the 5% level. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, and John. Federal Judge Eileen Cannon in Florida, presiding over Trump's classified documents prosecution, has canceled the May 20th trial date, postponing it indefinitely. Loyola law professor Jessica Levinson spoke to CBS.
She said there's just a lot of evidentiary issues to sort out. And she is pointing to the fact that we're talking about some concerns about national security. And that does raise additional questions for any judge when they're overseeing a trial like this.
Former President Trump faces dozens of felony counts accusing him of illegally hoarding classified documents at his Mar-a-Lago estate in Palm Beach, Florida. Trump took them with him after he left the White House in 2021 and then obstructed the FBI's efforts to get them back, according to prosecutors. He has pleaded not guilty and denied wrongdoing. Porn star Stormy Daniels testified yesterday at former President Trump's New York hush money trial about a sexual encounter she says they had in 2006. Daniels says the encounter led to her being paid off to stay silent during the 2016 presidential election. Testimony resumes tomorrow. The U.S. paused a shipment of bombs to Israel over concerns that Israel was approaching a decision on launching a full-scale assault on the southern Gaza city of Rafah against the wishes of the U.S. More than 1 million civilians are sheltering in Rafah. Far-right Representative Marjorie Taylor Greene says the ball is in House Speaker Mike Johnson's court after 2 days of meetings between the pair over her push to have him removed. Greene says she wants the Speaker to commit to several actions. They include no additional funding for Ukraine.
What I'm trying to do is give Mike Johnson a chance to be a Republican Speaker, and he seems willing to try to do that.
Speaker Johnson told reporters he and Greene are still talking through ideas, but stressed this is not a negotiation and that he will still continue to do his job. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Hey, Michael Barr, thanks so much. Parachuting in from Milken Institute, Hugh Von Steenis with Oliver Wyman out there educating people, informing people. And Paul, he just says there's no other topic out there. And I guess I get that with LA, because if I'm in private credit or equity, Hollywood's the best place to go right now.
Yeah.
It's to invent it. But Hugh just says there's no other topic.
Yeah. I mean, it's interesting. You think about private credit and just the extraordinary growth in the capital there, the funds flow there. And again, from what the experts tell us is, the great financial crisis, 2008, the banks are slapped with a bunch of regulatory constraints on some of the type of lending they could do, and it limited that. And so mostly on the leveraged loan business. And then so the private credit folks stepped in. And just like we grew up with private equity, now we've got private credit.
I was on the cruise liner, and I was out of touch. You didn't tell me about Disney. Mm-mm. I mean, I noticed in the report theme parks was barely mentioned. I mean, it's
theme parks. Theme parks are 70% of their operating income.
70% of the company.
Yeah, and that's not necessarily. I mean, it's a good thing because it's a great business, but it means a lot of their other businesses have declined dramatically. Think ESPN, and so that's increased the importance of the theme park business. And they benefited from the post-pandemic surge in travel, and they're saying that might be just kind of plateauing a little bit.
I don't go to ESPN like I used to. We got to talk about that.
Yeah.
It used to be like you went there like religion. Futures at -9 to VIX, 13.29 from New York City. Paul Sweeney, Tom Keene, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Stock futures, they have turned lower after the latest batch of earnings this morning. Shares of Uber, they are among the most active. Uber Technologies right now down 6.6% after the second quarter bookings missed estimates. On another front, shares of Apple up about 0.2% pre-market trading. Chinese iPhone shipments, they jumped 12% in March. In European stocks, extending their gains this morning, rising to a fresh record. Dow futures right now 13 points lower. S&P E-mini futures down about 8 points, and the Nasdaq futures 32 points lower. FTSE in London 26 points higher. That is up 0.3%. The Europe Stocks 600 index, that is up 0.3%. 2-year yields at 4.83. That's relatively unchanged. The 10-year yield right now up 2 basis points. That's at 4.48. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thanks so much, John Tucker. Good morning, everyone. On Apple CarPlay and Android Play on YouTube, search Bloomberg Podcasts, and you will find us. We've got the show on live. Good morning to you. I'm still not on live chat. I'll get on live chat here in a moment. Love that. But also the replay comes out, Paul. This is, it's nascent.
Yep.
I guess is how I put it.
But it's important.
We got a 3-hour broadcast, 2 hours, 56 minutes. And there'll be a lot of good things on there today, like Janet Henry joining us from HSBC. The only one I hate more than Janet Henry is James Pomeroy. Why is that? Let's explain that right now. Good morning, Janet. And the reason is HSBC is one of the most twisted houses of research in the world. They argue like cats and dogs. Steve Major over in Hong Kong, Janet Henry over in England. Everybody's in it, and it makes for, in this case, 29 pages of must read. You get a pencil out, the surveillance pencil, and you read the HSBC Global Economics Overview, waiting for the main act. You hate them because you got to read every page. Janet, with that introduction, what is the major message where you and Steve Major actually may agree on the view forward?
Well, you'd be amazed, Tom. We do all get on remarkably well. We have great debates, but also, in terms of our asset allocation views from Steve, they've been forecasting, higher yields than they were, for instance, a couple of years ago. But I think in terms of, the direction of travel of his forecasts over the last year has been to forecast higher yields than he was previously. And I think where we've been taken by surprise, and certainly what I wrote about in that report, and even what I wrote in my year ahead report, remember when the markets were really excited that we were going to be getting 6 rate cuts and we'd be cutting in March. We said then, no, it would be June. But suddenly we became the optimists in the room to suggest that rate cuts would be in June. We still think the Bank of England and the ECB will be cutting in June. But for the Fed, we now think it will be September.
So how does Christine, I'm going to rip up the script here, folks. Clarida's coming out. We got to get warmed up for Richard Clarida. Janet Henry, how does Christine Lagarde get out front of Jerome Powell?
I think because they are telling us. I think the question is not whether they can cut before the Fed. It's how much they can cut before the Fed. The disinflationary pressures are different in Europe, and not just the ECB. The Bank of England arguably as well. We still think the Bank of England and the ECB will cut in June. They've got weaker growth in Europe, even if it's on a slightly improving trend. Inflation is already lower. All importantly, service sector inflation is lower. Yes, costs are higher. The Eurozone does not have the US productivity story, and it has higher wage growth currently than the US. So it's not about the unit labor costs, it's about the different demand pictures and what that is meaning for inflation. And the ECB, almost irrespective of the data, currently, they've told us they're going in June.
Janet, just give us a snapshot of kind of the inflation picture in the UK and in Europe today.
Well, when we think about, what drives inflation, it's have you got the appropriate monetary policy setting to ensure that aggregate demand and aggregate supply achieve an inflation rate that's, at least in the direction of going back towards target. And that's what they're trying to assess. What is the appropriate policy setting? And I think for all of the major central banks, the story for most of the last couple of years was obviously, inflation was way too high.
Yep.
And when the ECB and even the Bank of England is much more about what's happening to inflation rather than like the Fed, which has an explicit dual mandate of what's happening to inflation and what is happening to the labour market. So I think the difference between the two is, weaker demand means weaker inflationary pressures. We have seen Eurozone wage growth slow now, almost as low as the US, but not as much, but it is at least slowing down and has been for some time. In the UK, annual wage growth is still a lot higher, but the recent momentum on the wage growth has been somewhat lower. So the difference is the difference in the demand pressures. Wage growth is slowing in all of them, but the difference on inflation is not so much about the cost side, it's the demand pressures from inflation in the US are stronger. Demand is a lot weaker in the US, in the UK, and in the Eurozone.
Janet, for our listeners and our viewers, HSBC stands for Hong Kong and Shanghai Banking Corporation. So we got to ask you for your kind of the HSBC house call on China. I have no idea how to handicap that. How are you guys thinking about it?
Well, like a lot of things in the global economy, it's very, very complicated, what is happening in China. And actually, since the start of this year, in terms of the global cycle, we have seen some green shoots. But, like everything, it's a little bit bumpy at the moment. And certainly within China, the areas of improvement have been very much concentrated in high-tech investment, which has obviously been the global story. Even in Europe, where investment's been weaker, it's been in the high-tech area where you've seen the strength. That is the same in China, high-tech related investment, partly private sector, but a lot of it in terms of the government's drive for greater self-sufficiency in certain areas, tech-related areas. But as has been widely reported, the major headwinds in China are still the ongoing drag for the property sector. And that is vital to getting any stabilization, a broader stabilization in consumer confidence and consumer spending, which at the moment is really only in services. We need to get a stronger consumer recovery.
Jen, I got to squeeze this in. It's too important. When you were a club cadet at HSBC, you ran the Pacific Rim shop. You were the economist for all the Pacific Rim for HSBC. Can Japan destabilize the Pacific Rim if they get the calculus on intervention or on yen dynamics or rate dynamics wrong?
It certainly can have implications for the currency, as you well know, Tom. You're right. I started life with HSBC as an Asian economist. I didn't, I wasn't responsible for Japan. I was the ASEAN economist during the Asian crisis. But I would say, yes. I mean, there's lots of ways in which Japan can impact the global economy. Even if things go well in Japan, it has a really sustained recovery and interest rates rise a lot more than we are forecasting. We've only got rates rising to 0.75 in Japan by the end of next year. If we were, for instance, in a 2% world or something, that has implications for the global cost of capital. On the currency, we've been surprised, our currency strategists have, by the extent of weakness in Japan. They still look for the yen to strengthen a little bit by the end of the year because we have got a rate rise in Japan, even as the other major central banks start to cut. But if Japan keeps weakening and the dollar remains strong, then I think that means weaker Asian currencies in particular, and also has implications not just for ASEAN and such like, but for China as well.
Very valuable. Janet Henry, thank you so much for running the shop at HSBC. We're going to go from her global look back to Kathleen Bostjancic. Thrilled that Kathy Bostjancic could be here on the U.S. Economic scene as well. Futures -9, Dow futures a -25. I guess it's a bull market. Paul Sweeney said this first, I don't know, like 3-4 days ago before my sabbatical. You said you're on the Dow 40,000 watch.
I was,
laughed at you.
I know. Here we are, 39,000 right here, Tom.
Yeah,
how about that?
We're there.
For John Farrow, I know he's all over that.
The VIX 13.31 says it all. Stay with us. Bloomberg Surveillance. Good morning.
Take a look at some of these.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, the latest batch of earnings you're getting is sending futures lower. Uber shares, they are down right now close to 7%. You had the gross bookings in the first quarter missing estimates. Lyft, they reported after the close of regular trading last night. Shares gaining right now about 5.4% in the pre-market trading. Ride-hailing firms' results and outlook, they beat estimates. And then Shopify shares, they're tumbling this morning. The Canadian e-commerce company said gross margins would decrease in the current quarter. This is a result of the sale of its logistics business. And right now, the S&P E-mini futures 10 points lower. That's down 0.2%. Dow futures down 30 points. And the NASDAQ futures 44 points lower. That is down about 0.2%. Look to Europe. The records continue. The FTSE in London up 0.3%, 22 points higher there. The Europe Stock 600 index, that is up 0.3%. Now, as far as treasuries, 2-year yield, 1 basis point higher right now. We're at 4.84. The 10-year, that's at 2 basis points higher. That is at 448. Dollar DXY up about 0.1% as a result of that. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Kathleen Bus-Johnson joins us now, Chief Economist with Nationwide. Obviously, the view to Columbus, Ohio, but more than anything, Kathleen Bus-Johnson with a wonderful perspective away from 3 zip codes in New York, 2 zip codes, 2 quadrants, I should say, in Washington, and maybe a zip code or 2 out at the Milken Institute. Good morning, David Weston. You know, Weston's listening to us.
I know.
Now.
Yeah, he gets up early.
4:30 in the morning out there. Beverly Hills Hotel.
He's up.
He's got the cabana by the pool.
Of course.
You know, he's up. He's listening. Good morning, David. Kathleen Bus-Johnson, I'm going to cut to the chase. You've got a wonderful, important truly nationwide, no pun intended, perspective as well. There's a boom economy out there. There's a boom stock market, on, and yet Paul and I hear every day that America's basically flat on their back. Where's the job? Where's the better job? What about my kids, etc.? Does this nation right now need rate cuts?
Well, good morning, Tom. Happy to be with both of you. Yes, I think the economy could use rate cuts. Of course, as we know, what's stopping that is the concern that inflation's still running too high and could reaccelerate, based on that. So, your point is well taken in that, we really have 2 economies right now. You have one where you have the more well-off households and the more well-off companies, like the large cap companies that can go to the capital markets and borrow quite easily and very attractive rates overall, especially relative to treasuries. But then you have small businesses and lower income and maybe lower middle income households that are really struggling. And those companies and those households are more dependent on current interest rates, variable interest rates. They weren't able to lock into low mortgage rates at 3%. They weren't, there are companies that were able to term out their debt and take advantage of very low, pandemic related rates. So that's where, I think that's the part of the economy that could use the interest rate relief. But, again, the Fed's worried inflation reaccelerates. And unfortunately, the lower income households and the small businesses, they would also really be hurt if inflation's not tamed. So it's, I think what you hear from Chairman Powell and others, let's tame inflation first, then we can provide interest rate relief.
Here's what, Paul, this is unpopular, but I just think they're doing this for the fancy guys in suits and bow ties. Again, I went down 2nd Avenue yesterday. Somebody's got to explain to me what small business does in this economy.
Yeah, exactly.
I was thunderstruck by the number of businesses shut down.
Yep, exactly. Kathy, let's talk about the labor market here. We're still, I guess we call it fully employed labor market. Do you have concerns about this labor market? Do you think the Fed has any concerns about this labor market?
We are indeed fully employed, but you are seeing on the margin some loosening of the labor market. Now, that is welcome. That's what the Fed was aiming for. They want some moderation because if it continued to be so robust, you continue to see the economy overheat in a sense. So moderation's good. Right now, we don't have signs that the labor market is collapsing, again, just has a nice slowdown. But, the longer the Fed has to keep interest rates elevated, the more potential that we see, downward surprises in employment growth and wage growth, which will feed into household income and then consumer spending. So we're watching it quite closely. We'll see how it plays out, going forward. Like, for instance, 170, what we got last Friday, 170,000.
Yep.
That's a great solid print. But if we start to fall to 70,000, well, then that's a different story.
All right. So again, let's assume we're kind of fully employed. Wages are pretty solid here. How's the U.S. consumer out there? Tom's talking about 2nd Avenue and some of the small business challenges. How's the consumer out there?
Yeah, there's a dichotomy. Again, if you're, upper income household or upper middle income, you've got a job. Wage growth is solid. You're now outpacing inflation, and you're an asset holder, right? If your home prices, the price of your home has gone up a lot. You own equities. You're feeling pretty good right now. But if you don't own houses, right, or assets, and you're renting, and you're dependent on you're facing still high inflation and high prices. You're relying more on credit, and those households, some of them are becoming more delinquent in their payments.
Right.
So there's where the rub is, and that's the struggle.
As usual, Kathleen Best-Johnson absolutely nails this. Okay, the partition here, Kathy, in this society is asset holders. It's like Monopoly.
Mm-hmm.
Do you own Boardwalk and Park Place or not? And never own the Purples. Okay, Kathy, if you're an asset holder, you're benefiting from the surge in rates, equity markets near record highs, etc. A huge body of America is not asset holders. Are they represented in the Eccles building at the desk of the Fed?
Oh, absolutely. I would actually say that this group of officials, the Federal Reserve, headed by Chairman Powell, are even more sensitive than perhaps other officials. Now, they always were, but they did the Fed talks right during since the pandemic. But they feel the biggest obstacle for those households is high inflation, and so they want to bring the inflation down. They see that as number one priority, and then they can provide the interest rate relief.
Right.
So I do absolutely think that is front and center for them in those.
Yeah, but I got a nominal GDP. If I'm running 1.5%, 2% GDP plus 3% inflation, I have what I'm going to call a sprightly nominal GDP. And Kathy, to me, I need proof that they can bring down service sector inflation, or is, say, Lindsay Pieggs at Stifel says, before they come down in rates, they got to raise rates to really clamp down. Is that a feasible outcome? Is that a probable outcome, rather?
So I do think eventually the Federal Reserve will be, successful in bringing down inflation. It's just at what cost? Now, at some point, not now, they're never going to, in the current situation, deviate from the 2% inflation target. But let's say when they do their reviews, of Fed operating policy and their goals, maybe that framework review, not this next one, but maybe eventually they'll say, well, should it be a little looser? Should we have a 2 to 3% inflation target? I think that's quite a reasonable discussion, but they can't do that now. Well, the bond market, vigilantes would be at arm's length, right? They would. You'd see a revolt in the bond market.
Kathleen Best-Johnson, thank you so much. With Nationwide this morning, Paul, I think this is a raging debate, and I'm sorry I disaggregate. There's a huge body of America deciding which vacation to go on next. Should we go to Paris or London? And I'm sorry, there's a lot of good prosperity out there to be constructive about, but there's a whole hunk of America that she alludes to that are not asset owning.
No.
That are like, okay, you got to give me a 7%. Look at housing in the country, just as one example.
I mean, the inflation that, most people deal with day to day. I mean, just go to the supermarket. I mean, it's still, the prices are just so much higher than they were a few years ago. And
the level's up.
The level is. And for most of those products, particularly packaged goods, they're not coming down. So it's just a question of, where do we go from here? But for a lot of folks out there, the wages still have to catch up with what we've seen in inflation over the last several years.
There was an economist years ago, Mark Berneker, who pointed out to me once that food in Europe's a lot more expensive.
Yeah.
And that, we're complaining about food, but compared to a lot of other nations, it's still a bargain. But with that said, I do everything from pre-pandemic is what I'm doing.
Yeah, I think a lot of people are too. And, we've seen wage increases, which over the last couple of years accelerate, and it's kind of narrowing that concern a little bit, or mitigating that concern a little bit. But still, for a lot of people, you just think about what you're paying, for your grocery list now versus a few years ago, and it's just so much higher, and it just doesn't feel like the wages have kept up. And there you are, and that's the challenge for a lot of folks. They feel like, are you better off than you were a few years ago? Maybe not.
Yeah. Program note, pro tip, yen moves.
Oh boy.
It's a little bit weaker over the last 2 or 3 days.
Yep.
We're not out to new weakness, but it bears watching. Euro yen 167.05 if yen weakens against euro. Out through 168, it may be a hat trick.
Okay.
Hat trick of intervention. We'll have to see. But we're watching that. For Global Wall Street, that is important. Maybe not for Michael Barr, but for, I'm sorry, yen dynamics. Barr doesn't care about yen dynamics.
No, please.
He's just looking for a Japanese baseball pitcher for the Tigers to somehow save the day. The guy for the Dodgers looks good.
Ooh.
The pitcher they have?
Yes.
He looks very, very good. Where are we here? The VIX, 13.33. With our news in New York City, Michael Barr.
Tom, Paul, John, thank you very much. An adult film star was on the witness stand at former President Trump's criminal hush money trial in New York. Trump spent yesterday in a Manhattan courtroom hearing porn star Stormy Daniels describe in graphic detail her sexual encounter with Trump in 2006. Trump, who has denied the affair ever happened, downplayed the testimony on his way out of court, saying their case is totally falling apart.
I should be out campaigning right now. We're leading in all the polls. I'd like to be campaigning. We'd be leading by a lot more.
Inside court, Trump was audibly cursing and shaking his head during Daniels' testimony, and his lawyers made an unsuccessful effort to have a mistrial declared. Daniels' testimony is scheduled to resume tomorrow morning. While Donald Trump's criminal hush money trial continues in Manhattan, his classified documents trial is postponed. Bloomberg's Amy Morris reports from Washington.
U.S. District Judge Eileen Cannon, who is overseeing the criminal proceeding in Florida, has set a whole new schedule for motions in the case and announced that a previously scheduled May 20th trial date is pushed back now indefinitely. Special counsel Jack Smith wanted the judge to reschedule the trial for July, but the judge's order suggests she's not likely to even decide on a new date by then. It is a blow to the Justice Department's efforts to get a jury verdict in the case before the November presidential election. Smith is also waiting on a ruling on presidential immunity from the Supreme Court to determine if yet another case can move forward this year. In Washington, Amy Morris, Bloomberg Radio.
The Biden administration is placing a pause on weapon shipments to Israel amid new attacks in southern Gaza. The White House opposes an Israeli ground invasion there unless there's a credible plan to protect more than 1 million civilians seeking shelter in Rafah. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Now, Michael Barr, you nailed it about 6-7 months ago. You said the difference is baseball's become like the NBA, where it's about the individual stars. I am loving the first couple months of Major League Baseball. I'm addicted. It doesn't even matter who I'm watching. There's just some guy that's unreal.
There are two things, like you said, the individual stars, just like it is in the NBA, and the time of the game, just like the NBA has been shortened. And now the younger people are like, hey, okay, I can devote some time to this. It's not like me.
And I get angry, like they're in the 8th inning before I know it, and I missed half the game, but that's great.
Yeah.
We're not sitting around watching Nomar Garciaparra slugs. He's like Cash Flow. This is years ago. Cash Flow's doing the Nomar thing. He's like 4 years old. That's all gone. I'm loving it. MLB, go get him. From New York City, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Futures right now point to a lower open of Wall Street when we get the cash open. In the pre-market trading of shares of Uber down close to 6%. Gross bookings in the first quarter missing analyst estimates. Federal Reserve Bank of Minneapolis President Neil Kashkari says it's likely central banks are going to keep rates where they are for an extended period of time. Investors also winding down from earnings season. 438 companies in the S&P 500 have opened their books. Close to 80% have delivered positive earnings surprises. Dow futures down 22, S&P E-mini futures down 8, NASDAQ futures down 37. More records in Europe. The FTSE in London 21 points higher, up about 0.25%. 2-year unchanged, 483. The 10 up 2 basis points, 448. I'll close with this one. Carnival, Disney Cruise Lines, Norwegian Cruise Lines, and MSC Cruise Lines and Royal Caribbean, they're in the race for land. Cruise lines spending at least $1.5 billion since 2019 to expand or improve private islands in the Caribbean. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Bloomberg Surveillance this morning. It's brought to you by Interactive Brokers. Interactive Brokers. They charge dollar margin loan rates from 5.83% to 6.83% rates subject to change. Learn more at ibkr.com/compare. Out on YouTube, people pumped up over our baseball coverage. I saw this guy pitch with the Padres. It's like Johnny Padres redone. Paul, 5'10", 175 pounds, and he's bringing it in at 96 miles an hour. It's a redux of Dick Raditz. His name is Imanaga. He's from Japan.
Shota.
I couldn't believe it. I mean, he's got to be the smallest pitcher in baseball.
Smallest pitcher in baseball, but he brings it. Good for him. Shota Imanaga from the Cubs.
From the Cubs. Thank you, Jim, for that. Out on YouTube. Of course, you can watch the Cubs on your new iPad. Joining us right now, Mandeep Singh, to straighten out 15 iPads. Was this a plus day for Apple yesterday? I sort of get this nascent feel, even XAI chat. This is going pretty well for Tim Cook, right or wrong?
Well, the China numbers, I think, that came out were positive. Everyone was really thinking of a worst-case scenario. So that obviously is not the case. And in terms of their iPad launch, look, I'm a software guy. I get excited when I see new apps that leverage
come on. You're so excited about 3 nanometers M4 chip.
I am.
I mean, it's what you and I talk about. We geek out on that.
Google has already shown that, as well as they have incorporated a large language model that takes advantage of that 3 nanometer chip. Apple didn't do that. So that's the gap they got to plug in their developer conference.
Everyone knows the guy that tells me what to do, Mike Bloomberg, he's going to get the new iPad. He's going to get the best one. So will John Tucker, because Mike gets one. So John Tucker's going to have the fanciest iPad out there, and it's going to say, let's do AI. What is John Tucker going to do on his fancy new iPad with AI?
The first thing he will do is to engage with Siri. The one product that Apple has done nothing.
He doesn't know what that is.
So, look, I think that's the biggest use case for AI. If this thing is real and you can, engage with it in a productive way, it has to manifest in a voice assistant.
Let's be clear here. Tucker doesn't engage with his next-door neighbors.
Much less Siri. So, all right, Mandeep, what I did not hear yesterday with the iPad was really anything AI. I'm banking on this June developer conference.
Yeah.
And I need to see something that says Apple is in the AI game. Am I going to get that in June, do you think?
I think so. And the pressure is on them to incorporate it in the next version of their operating system. Google has already done that in terms of integrating their smallest LLM with their Android operating system. That's what developers want, because then you can build new functionality on top of it, roll it out in apps. But if it's not there in the development kit that Apple has with their operating system, it's so hard to build.
Okay, so to Paul's perfect question about what happens in June here, the bottom line is yesterday they brought out Logic 11, the music software, and it has 3 new things that are what I'm going to call AI-ish. I still don't understand, how many iPhones are in my family, Paul? 7 with that bill? I don't understand what AI is going to do to various and sundry children's iPhone. Is it going to have them spend less at the department store?
Well, it could. I mean, look, the use cases of this are pervasive. That's what we are learning in terms of the companies trying to pilot new applications. How it's going to drive that 7 people upgrade in your family, it's going to be a function of, can I run this operating system just on that latest iPhone or iPad, or can I run it on that old iPhone? Right now, all the operating system upgrades that Apple rolls out, I can run it on my iPhone 11 or 12. Why do I need to go to iPhone 15 or 16? Because
can you come over for dinner today?
Explain that to the troops. All right, I need to, when I'm talking Apple, if I'm a shareholder or prospective shareholder, I have to have a call on China. I don't have a call on China. I don't think this is a good story for Apple. It's 20% of their revenue. It's a big part of their supply chain. I don't have a call there. What do you think the call is on China for Apple?
I mean, there's no doubt it will be a decelerating business to the extent that right now it's 20%. It's going to be 15% a year from now or 2 years from now.
That's not good.
No, think about it. 5% of a $400 billion revenue base. Yep. That's a pretty sizable number. And where do you make up? Even if Apple is gaining share in India or in other markets, it can't make up for that 5%. So we're talking about big chunk of revenue leaving just because you don't have that market anymore.
So what do the bulls say about that? I mean, if we had Dan Ives in here, what would you say about, I'm going to lose, that's $20 billion of revenue that's just going poof.
Well, so the bulls would argue, it's going to happen at a much slower pace, and Apple will continue to launch, new products where they will have higher ASPs. ASP growth is still the bull case for Apple.
Then average selling.
We got to go on this breaking news, and we're thrilled to have Mandeep Singh with us, expert on this. Intel misses for the 4,000th time. Intel sees second quarter revenue below midpoint of blah, blah, blah. It still sees fiscal year revenue to grow year over year. Is there a new Intel, or is it the same train wreck you and I have covered for a decade?
I mean, we're talking about a company that is going through a transformation, and we know transformations are tough when it comes to technology.
Yeah, so's the Republican Party. Come on. When do they need a new CEO to fix this thing next?
No, I think he's pulling all strings in terms of trying to revive the company through different aspects, foundry, chip making. It's just when you are behind in the chip business, it's very hard to catch up, and that's what Intel really rode on for the 25 years they were at the pinnacle.
Is Joe Biden helping or hurting Intel by his semiconductor expansion?
I mean, clearly the government is helping Intel here in every possible way in terms of the CHIPS Act disbursements and just allowing them to, do what they can in terms of catching up. Intel getting the ASML equipment, that being the latest news, that's a huge deal because they missed on the EUVs. Yeah,
we're running out of time, Dan. Yeah. Chris Miller, chip war. ASML's over in the Netherlands. They got to sell to everybody. How does Intel use ASML stuff versus how Taiwan Semiconductor uses ASML stuff? There's got to be a difference.
I mean, ASML is coming up with a new and better machine every 3 months or every 6 months. Who do they give those machines to? Obviously, they're going to sell it. If Intel gets a preference, that helps them narrow some of that lead that TSMC and other fab makers have. So clearly, getting hold of that machine, which is in hot demand, clearly makes a difference.
Were you impressed by my question there?
That was very good.
I got it from John Tucker.
Nice. He's all over this stuff.
Saying, thank you so much. We look forward to John Tucker speaking to Siri. Mandeep Singh on the new Apple.
Boy, Tom, look at Intel. Stock is down 40% year to date.
Don't get me going.
Wow.
It's painful.
I mean, it's just a question of everybody's looking at these chip companies as the AI play, at least on AI 1.0, but Intel's not participating.
Tony Tennille's birthday. She's 79.
Really? Wow.
Yeah, and this was the big hit. What you got to know is, in the major scale, no one owns it like Neil Sedaka. He wrote the song. Neil Sedaka's one of my gods. Here's Captain and Tennille. I hated this song the first time I heard it.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. We welcome all of you to Bloomberg Surveillance. We're out on YouTube. Search Bloomberg Podcast. Bloomberg Podcast, it's a whole new concept. It's really where the future is for us. Go to Bloomberg Podcast and you'll see us there, live YouTube chat. Out on Apple CarPlay, Android Play, is, well, can we have a moment of silence first for Alex Steele, who sat in the last couple of days?
Yeah.
Thank you.
She got up early. She did a great job.
Yeah, somebody in my house said she's pleasant, unlike you.
Absolutely.
And,
No, she was wonderful.
But Alex Steele, thank you for sitting in here to get our early mornings started. Bloomberg Surveillance this morning, brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick's enterprise risk management solutions can help your company drive value through stronger compliance and reporting procedures. Visit CohnResnick.com for stronger compliance and reporting procedures. CohnResnick.com, and we thank them. Lots going on here. Equities, bonds, currencies, commodities. This hour, currencies, commodities, bonds. We're going to do a lot of equity in the 9. Kona hate to show up here. What happened to cocoa? Finally, it rolled over.
I mean, I don't know. I mean, downstairs, the chocolate shop, the Swiss chocolate shop down in our lobby, I mean, it was just standing in line the whole time. I mean, people would
really
love that
worked
stuff.
Out. Yeah, I've never been in. You go outside.
Yep.
And
Swiss
to your right,
thing,
it's like all handmade chocolates that are blessed.
Open completely through the lockdown, the pandemic, never shut down, and there was always a line in there.
Yeah.
People had to get during the pandemic lockdown, they had to get their cosmetics across the street at Sephora and had to get their chocolate. That's how it works.
Yeah, I went in there, bought a nice box of chocolate as a gift for someone. It was like this big.
The mortgage.
And that was
Which child did
that
you
was
mortgage?
$20 for like 4 chocolates.
Swiss know their chocolate.
I walked in. I said, "Do you have any Fannie Farmer French mints?" And they looked at me.
No, the Entenmann.
I was from America as well. How about a Bloomberg Business Flash with futures -10? John Tucker.
Yeah, under a little pressure this morning after some of the latest earnings reports. Got results from Intel. It's an earnings miss there. Intel now says it expects the second quarter revenue below the midpoint. Their excuse, the Commerce Department revoked some export licenses to a customer in China. And checking shares of Intel right now in the pre-market. Lo and behold, they've just turned higher, and they've just turned lower again. Down 1%. Let's say it's volatile trading. And then we'll move on to Uber shares. Right now, they have turned higher, up 2%. Uber Technologies reporting gross bookings in the first quarter. They missed analyst estimates. Now, as for U.S. futures right now, they indicate maybe a lower open on Wall Street at the cash open. The Dow futures right now, 14 points lower. The S&P E-mini futures, they're down 9. The NASDAQ futures right now, 50. Different story in London and overseas in Europe. FTSE in London, they are pressing higher. More records in Europe. The FTSE is up 0.3%. The Europe Stock 600 right now, 0.3% higher. Dollar DXY up close to 0.2%. Yields right now. The 2-year is at 483. That's relatively unchanged. The 10-year up 2 basis points. That's at 448. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Tom.
Thanks so much, John Tucker. There are moments in you doing this, folks, in the privilege of doing Bloomberg Surveillance with Paul Sweeney and all that we do every day where time stops. One night in Davos, in a piano bar before the music played, nice. I sat for an hour with Lord Layard, Richard Layard, a giant of economics. Paul, he invented... How do we figure out how happy we are? And this became like a Jeff Sachs called me up one day. He goes, "You got to do this thing with me and Lord Layard on happiness." And we did a whole thing at Davos on this. It was absolutely phenomenal. Drinking the Kool-Aid at the London School of Economics years ago with Lord Layard was Dirk Willer, who joins us now from Citigroup. Dirk, just what was it like dealing day to day with a giant like Richard Layard?
It was really fascinating. I must say, I was there before his happiness research days.
So you were there for the sadness.
Actually, it was also happy days, but it was much more focused on Russia, because at the time he had a big consultancy project in Russia, in Moscow in the 90s, and I was part of that. So the happiness came later, I think.
Let's start there with Citigroup and your work there, owning the high ground in emerging markets as well. Is Russia now, with the war, with the next term of Putin, is it a frontier economy or an emerging market economy?
I mean, it always was an emerging market, but I would say certainly many steps back from the optimism that we had all in the 90s, clearly. And at this stage, obviously, completely uninvestable for anyone in the US, and therefore not really a research topic for us, unfortunately.
All right, Dirk. So when I think of Citi, I think of terrible elevators at 388 Greenwich Street, but I also think of a global view, unlike any other institution. So as head of global kind of macro asset allocation, where are you telling clients the opportunities are on a global basis? How do you start from that 30,000-foot level?
Yeah, the elevators have improved. So we had, of course, a big renovation while we were sitting in the building. So, but it's behind us and all is good. But you're right. I mean, our global reach is obviously a big advantage. I mean, I would say just in terms of asset classes, it's still a world primed for equity outperformance. And the reason is that I think we are in a still reflationary world, not in a stagflationary world, as recently some have made a case for. But a reflationary world, we are somewhat early cycle, at least when it comes to the manufacturing cycle. We see a bottom in the manufacturing cycle broadly across the globe. And that usually is good for equities, it's good for credit, it's good for commodities. It's not overly good for government bonds. Usually it's actually negative for the dollar. That hasn't played out so far. But the other themes are in play, I think. And that keeps us broadly positive risky assets. Now, I would say, if you look at this very moment in the cycle, credit is as expensive as it ever has been. So the spreads are the tightest for that moment, which leads us to equities over credit, actually. But we broadly think we are in a good spot.
All right, if we're equities maybe more than credit, given the tight spreads, where equities? Is it U.S. or do we go outside the U.S.?
Yeah, we are still big believers that the general cycle has to be played where in cyclical markets, really. And the cyclicality can be expressed partly on the tech side, and that's where, the semiconductor cycle we still think is in an upcycle. And then if you just look at the equity markets that do well when the manufacturing PMI is rising, that leads you to the US, that leads you to emerging Asia, very importantly, so Korea and Taiwan. That also includes Japan. And then the less cyclical ones, actually surprisingly, LATAM is not showing up as overly cyclical because it really depends very much on China, not on the global cycle. The UK shows up as not very cyclical. So we focus on emerging Asia and the US very much, which also has, of course, a high tech component, which we still think is where the fire is, and you're supposed to be where the fire is burning.
Dirk, I look at the standard deviation on yen and, of course, the rate folly in Japan as well. How does that affect emerging Asia?
The emerging, you mean the FX part of it?
The FX part, but well said. The FX part, but also combined to the rate folly, the interest rate folly of Japan, their experiment in reflation. How does that affect Singapore?
Yeah, and in general, it's true that the yen on the one hand, and to some extent the renminbi, are clearly setting the scene for all of emerging market FX, emerging Asia FX. So basically, as long as the yen is under pressure, the rest of EM Asian FX is under pressure too. Now, Japan has obviously stepped up because for a long time they were very happy with the weak yen. It was part of the policy. It was desired to have a weak yen. That has changed. But the big issue for them is, of course, that they sterilize the intervention, and it's not a bilateral intervention either. And these interventions just never work. And so at best, they can hold the line here a little bit, slow things down, but in the end, it will all be about US rates, right? So I don't think it makes a difference that they changed their policy on the yen for emerging Asia very much. It does make it a little bit harder to play this EMFX carry trade that everyone loves to play, right? Because you're basically long LATAM FX, short Asia FX.
Right.
And how short you want to be if they really intervene heavily. But we don't think the yen goes far. So we still actually like the carry trade.
Dirk Willert, thank you so much for Citigroup. Don't be a stranger. Let's do it again. I like the he studied sadness at London School of Economics with Lord Layer. Mike Spector, Chris Prentice at Reuters. Moments ago, Tesla autopilot probe, U.S. prosecutors focus on securities and wire fraud. That is a breaking story. Tesla down 2.7%. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, John. Federal Judge Eileen Cannon in Florida, presiding over Trump's classified documents prosecution, has canceled the May 20th trial date, postponing it indefinitely. Loyola law professor Jessica Levinson spoke to CBS.
She said there's just a lot of evidentiary issues to sort out. And she is pointing to the fact that we're talking about some concerns about national security. And that does raise additional questions for any judge when they're overseeing a trial like this.
Trump faces dozens of felony counts accusing him of illegally hoarding classified documents at his Mar-a-Lago estate in Palm Beach, Florida. Trump took them with him after he left the White House in 2021 and then obstructed the FBI's efforts to get them back, according to prosecutors. He has pleaded not guilty and denied wrongdoing. Porn star Stormy Daniels testified yesterday at former President Trump's New York hush money trial about a sexual encounter she says they had in 2006. Daniels says the encounter led to her being paid off to stay silent during the 2016 presidential election. Testimony resumes tomorrow. The U.S. paused a shipment of bombs to Israel over concerns that Israel was approaching a decision on launching a full-scale assault on the southern Gaza city of Rafah against the wishes of the U.S. More than 1 million civilians are sheltering in Rafah. Far-right Representative Marjorie Taylor Greene says the ball is in House Speaker Mike Johnson's court after 2 days of meetings between the pair over her push to have him removed. Greene says she wants the speaker to commit to several actions. They include no additional funding for Ukraine.
What I'm trying to do is give Mike Johnson a chance to be a Republican speaker, and he seems willing to try to do that.
Speaker Johnson told reporters he and Greene are still talking through ideas, but stressed this is not a negotiation and that he will still continue to do his job. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thank you so much. I've been remiss on this, Paul. We need a redo on Netflix. I mean, the chart looks like Microsoft or Google or even, beleaguered Apple as well. It's about ready to break out to new record highs. I just did a fancy log chart on it. And, it's like a boom chart. They still got the wind. They still doing it, right?
Yeah, 260 billion market cap stock. It's up 25% year to date. It's up about 80% over the past year. Yeah. So it's just been an extraordinary story. And you just look at the profitability, Tom, and it just shows that streaming can, in fact, be extraordinarily profitable. And we saw Disney yesterday get profitable for their streaming business for the first time ever. So we'll see if they can.
It's terrible. I mean, the last decade, Netflix has done 25.1% per year. That was just because of the chess show.
Exactly.
That's the reason. Good morning, folks. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. It is Bloomberg Business Flash. U.S. futures right now indicate a lower cash open this morning. Let's start off with this report from Reuters this morning. Prosecutors examining whether Tesla committed securities or wire fraud by misleading investors and consumers about its electric vehicles' self-driving capabilities. According to this report from Reuters this morning, the Justice Department examining other statements by Tesla and CEO Elon Musk suggesting the cars can drive themselves. This morning, shares of Tesla, they are down close to 4% in the pre-market. We've also seen some volatile trading in the pre-market. On the earnings front, Uber reporting earnings this morning. Those shares, they are now down right now 7.2%. Uber Technologies reporting gross bookings for the first quarter. They missed analyst estimates. And then shares of Intel right now, they were lower, down 2.3%. The company says it expects second quarter revenue below the midpoint of $12.5 to $13.5 billion. Dow futures right now 57 points lower. That's down 0.2%. The S&P E-mini future is 17 points lower. That's down 0.3%. The Nasdaq futures right now 86 points lower. That is down 0.5%. FTSE in London, more records in Europe. That was up 0.3% right now, up about 23 points. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Tom Keene and Paul Sweeney, good morning to all of you on Apple CarPlay, Android Play, on YouTube. Search Bloomberg Podcast. Lots of good things happening out there, including our replay, this entire 3-hour show with Tom Stores. We replay it. You can see it. A huge demand from the left coast. I mean, they're like, okay, we're not up at 4 a.m. Yep. We're not doing it. So we've got a replay. Really, the replay is for the milk. Carol Masser said, I need a replay.
Sure.
She's out at milking.
Yeah, I know.
She's styling.
Hobnobbing.
Very, very hobnobbing.
Yep.
I'll say, I went to Michael's last night for dinner out there. Anyways, you look for our milking coverage as well. David Weston leading that coverage with other worthies. Joining us right now, and what's great about this is it's a really informed note, not only about what's yield going to do, what's the Fed going to do, forget about that. We'll cover that with 14 other guests, but the flow of money out of your Treasury. Tom Satoris joins us right now. He is with a Strategist. If things change for the Treasury, now that we have a higher coupon, they're doing this and that with the Fed, but is there going to be a dearth of bills or too many notes? What's the flow look like right now?
Well, short term, we're probably looking at a dearth of both bills and notes. That is, the Treasury has no immediate need to increase its financing, so it doesn't have to come to market and increase coupon auctions or bill auctions. So we're going to be going through a seasonal period, which, by the way, could last up to 2 quarters here based on Treasury's own projections and tax takes, that we could see a fairly muted Treasury market because of supply.
Well, that's what I've heard, but the critical question is, after John Tucker paid his taxes, did Washington get its fair share? What does the, quote, tax take look like this year?
Well, I think the official numbers are somewhere around $280 billion or so.
Yeah, that's Tucker.
That was just from John.
Yeah, exactly. And big picture here is it's better than it was last year at this time, but it's worse than prior expectations. So it's not as good as was previously projected, and that does mean there's an incremental increase in need for bill issuance this quarter versus what was previously expected. But either way, this is the seasonal strong patch when it comes to Treasury revenues, and that's the important takeaway. And we shouldn't extrapolate that over 12 months. We just finished April. People paid their taxes.
All right.
Excuse us. Let's get an anecdotal report on that. I'm sorry to interrupt, Paul. John Tucker, did we pay our taxes?
Are we talking about the federal or the state and local property taxes, which are far, far more?
Yes. Thanks to living in New Jersey. Wait till the congestion tax comes to hit Mr. John Tucker.
Can't wait.
Exactly. All right. Given that background, Tom, what are you guys baking into your outlook for this Federal Reserve?
Yeah, so it's fascinating because everybody's focusing on the Fed held firm, they held steady, there's no change in interest rates. In fact, they're kind of backing away from the 3-cut mantra. That's hawkish. Baloney. The Fed cut the pace of balance sheet reduction, particularly on the Treasury side, from $60 billion per month to $25 billion per month. When you talk about the impacts on the economy, and in particular the impacts on the financial markets, the Fed funds rate really does not matter that much anymore. The balance sheet matters wildly. And that's where the most important action was. And so the Fed is telling us they've already starting to ease. The process has begun. And no surprise, you saw equity markets rallying, bond markets rallying. There's other factors here at play as well. But the slowing of that pace of balance sheet reduction, it clearly is an advantage to long duration assets.
All right, 10-year Treasury, we're sitting here today, 4.47, 4.48. Where do we end up, do you think, year end, do you think?
Well, I think it's going to be a roller coaster. So where we are at the end of the year, very well may be 4.5%. How we get there is going to depend on the evolution of the inflation data, the size of the deficit heading into the fourth quarter. But our base case forecast right now is we see yields, 10-year Treasury yields dip a little lower between now and, let's say, Labor Day, and then begin to gradually make a migration back higher. So down to 4%, back up to 4.5% is our current forecast.
When you and Jason Trennert meet, which is, Paul, it's usually like once a quarter, maybe twice a quarter. When you two meet, how does the yield world that you have fit into Jason Trennert's equity world? And to me, the dynamic there is the cash that's out there. We had somebody on a couple days ago who said we've basically never seen the cash like we've seen now. When does that cash break, and how does it break to go to equities?
Well, so the primary way that we think about how the bond market, and let's just again focus on 10-year Treasury yields, the primary way we think about two primary ways. There's one, the impact on S&P valuation, let's say the S&P multiple, and two, the impact on credit markets. What we've found simply over the last year is a 10-year Treasury below 5% adds some marginal stress to the credit markets. But once you get up to about 5%, you start getting stress in the credit markets, and valuations across the entire global asset space begin to wobble lower. So as of right now, the recent empirical evidence suggests to us that a 5% 10-year Treasury yield is the break point at which everything begins to unravel. So the primary ways we think about it is simply through valuation and the alternatives. Now, with 10-year Treasuries at 5%, it's attractive to not just equity investors, but cash investors, corporate bond investors. So a lot of asset classes begin to migrate into Treasuries when you get 10s up to those levels.
All right, I got the 2-year 4.83%. Do I sit there, or are you telling your clients to maybe take some credit risk?
So we made a gutsy move with our fixed income portfolios about 2 weeks ago. When 10s hit about 465, we said it's time to add about a quarter of a year duration. We did that.
Quarter of a year duration.
So, and primarily in the government space. And so we're now sitting on 20 basis point rally lower. We're telling clients to hold. We wouldn't be adding duration now, but our expectation is 10s are going to push a little bit lower, yields down to maybe 4.25, at which point in time we'd take some profit on that.
But to your wonderful answer there on 5% ramifications, do you model out that on a fan distribution? Is that possible?
Is it possible for
10-year to 5?
Oh, absolutely. So the most important data point in the next couple weeks is that CPI number, I think next Wednesday. If that comes in hot again, then the Fed is going to look like it's still a little too dovish here, and markets are going to start to price in a higher for even longer. And sure, 10s are going to make another move back out to the 470 level. Right. And if we get a strong jobs report next month, then 5% is in the cards for 10s.
Yeah. Program note, I would love to do 2 blocks with you and Jason Trennert. That would be really cool.
Smart folks.
This is really, hugely informative. Tom Satoris, thank you so much on fixed income at Strategist with Jason Trennert there on the bigger picture, and also blue chip stocks as well. Blue chip stocks aren't doing all that well, negative 18. And I would say, Paul, with the Intel announcement of an hour ago, and now Reuters with their Tesla announcement on some forms of investigation of Tesla for autopilot. I mean, the news weighs this morning.
I'm not doing autopilot. Are you kidding me? I mean,
Ed
although on the new wheels, they do have some serious kind of autopilot stuff on there, but still the hands are on the wheel.
Ed Ludlow's been a huge value add on this. Seriously, folks. He's out on Twitter, doing a Twitter run as he's on autopilot driving off the Golden State Bridge. It's a huge value add. Futures negative 18, Dow futures negative 62. From New York City across this nation, Bloomberg Surveillance.
All right.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And futures right now indicate a lower open on Wall Street. Futures are driven lower in part by the earnings report that we're getting. Let's start off, given its weighting, with this Reuters report. Prosecutors looking into whether Tesla misled investors and consumers about the electric vehicle's self-driving capabilities. And as we look at the pre-market right now, shares of Tesla, they are lower, over 2%. And Intel says it now expects second quarter revenue below the midpoint of $12.5 to $13.5 billion. after it was informed by the Department of Commerce that it was revoking some export licenses to a customer in China. And, of course, the big story of the morning with Uber Technologies. They reported gross bookings in the first quarter, missing analyst estimates. And as we look at the Dow futures right now, 61 points lower. That's down about 0.2%. S&P E-mini futures, 19 points lower. That's down 0.4%. The NASDAQ futures right now down 96 points, down 0.5%. FTSE and London up again, up about 0.25% right now. 2-year yields unchanged, 483. The 10-year yield, that's 2 basis points higher. That's at 448. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Pulling time.
John Tucker, thanks so much. Economic indicators this morning and into next week in a key CPI report. Brought to you by Commonwealth, always Commonwealth. Commonwealth supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. The romance of economies. Where did it begin, Paul? Remember?
The romance of?
It began with the Fidelity and Fiduciary Bank 2/3 of the way through Mary Poppins in 1964. And the brilliant Dick Van Dyke does a spin on one firm out of London that goes back to 1783.
Really?
ED&F Man. This is the Roman. When you study commodities, folks, which I did because they trend, you lose less money with commodities if you don't leverage up. And the answer is the romance of it was out of London.
Yep.
Going back centuries with ED&F Man in our
He's
studios
going to break out
this
in
morning.
song?
Yes.
Yeah.
He's going that direction, you know.
Chim Chim Cheree. Koda here to save us from ourselves this morning. We are thrilled to have you here. How is the commodity business right now? When cocoa goes to the moon like it did, is everybody on board, or is there 7 people you know in Dubai? I mean, how's the commodity business right now?
I mean, it depends which commodity, right? So energy, metals, softs, ags, they're all running very separate little individual fundamentals. So
Right.
You mentioned cocoa. I mean, gosh, that's not for the faint-hearted. Cocoa is the commodity that doesn't ever get talked about, and yet it's been on everyone's lips in the last...
Why did it break the last 2 weeks? What happened to make it break?
Okay, so simplistically, it just got too high. And
Really? It wasn't like a fundamental issue?
No, to be honest, no. If anything, fundamentals have not changed at all. I think what we're seeing is potentially some... it just got to this level where there was hedge lifting, there was... Speculators had actually left the market quite a bit already, but there were still some spec longs. Those decided to exit. And the chart just broke. I think you just suddenly started to see.
All right, GLCO, the Global Commodities Monitor on the Bloomberg Terminal. That's all you need to know from me, because I don't know anything about commodities. But then I click on cocoa, and I see back in September 22, I don't know, was it 2,400 something or others, whatever the bushel, whatever it is. Then it triples over the next year and a half. What happened to make cocoa triple? Now it's pulled back a little bit here, but is there a reduction in supply? Was it a technical trading thing? I mean, it's just chocolate. What's going on here? This isn't gold.
So it's chocolate, and it's inelastic demand. Everyone likes their chocolate.
Yep.
There is no substitute as well. It's the
There is
only...
no substitute. Good.
There is no substitute. There is the feed ingredient is cocoa, and cocoa is only grown in Ivory Coast, Ghana, and West Africa, and pockets of Latin America. It's too concentrated in one particular part of the world.
And so is it a supply issue?
100%.
Oh, okay.
In Manila today, it's 95. South of Manila and Iloilo tomorrow, it will be 96 in the Philippines. Japan has a massive heat wave. John Tucker this morning at a climate report where the average April was up 2.8 degrees or whatever. In your world, is heat now a new heat, and will it change the soft world?
It's being talked about too much now, and for a good reason. There's heat stress, as you mentioned, in all the Southeast Asia, in parts of Africa, in Dubai, in the Middle East. It's intense, and climate change is definitely causing more extremes, and it is causing stress on our crops. And so when going back to cocoa, what we saw is that in West Africa, we've just not the cocoa trees are dying. They're full of disease. You had unconventional weather, which led to poor yields, and unfortunately, we're now in the third consecutive deficit, and no supply to be seen.
Is there a winner in the softs if you believe climate change is here to stay?
I mean, potentially. If prices go up because the markets realize that there's a supply-led shortage, eventually prices will go up, and that should incentivize the producers to ultimately reinvest in their crops. But that's not as straightforward, because right now most of these producers, at least in Africa, are not reaping these super crazy high prices because they've already sold and hedged their crop forward already. So it's not really easy. Speculators have been coming in, dipping into the softs quite a bit recently. We've seen that in cocoa and coffee. They've definitely made a buck or two there. We've even seen oil traders come into cocoa because it's been so volatile. But it's not not easy to say who the winners are. I mean, arguably, the food manufacturers, the Nestle's, the Mars bars, they're the ones who enjoyed low prices for such a long time, and now they're probably suffering a bit.
Dumb question of the day. You listed a handful of small West African countries that can produce cocoa. We can't do it in Mississippi. We can't do it in. It is
100% tropical. It's a very specific latitude in the either side of the equator.
And you're trying to grow cocoa?
I'm trying in my backyard. I'm thinking,
Now, remember how it's pollinated. It's pollinated by fleas that are carried on the backs of wild boars.
What?
Yes.
No, I got to
I'm not making that up.
What is this wild kingdom? With
just let you know, they don't have wild boars wherever.
Okay. While we're watching the Yankees and stuff, he's going on Wikipedia and just going down these rabbit holes.
He needs to be medicated. Kona, I look at where we are, and a great help for us has been Javier Blas, who's world famous in petroleum, and he's got a sidecar industry in olive oil. I spoke to the former finance minister of Spain, who basically lied to me that there isn't a drought in Spain. Olive oil's through the roof. So do you, within KD&F, do you look at olive oil, which is something every listener's interested in, and is like basically here to stay like the other beleaguered climate change categories?
No, so number one, olive oil doesn't have a futures industry, and so it's difficult for us to trade that. It is quite niche. It is a Mediterranean commodity, clearly. And I do know it has been suffering from droughts in those specific regions you mentioned, Spain, Italy.
I propose immediately that there's a futures industry. Javier could play it. You'd be long Spain forever. Paul, get one more in here.
Coda, what's the commodity that people are asking you about your view the most these days?
Today it's coffee a lot.
Okay.
And in particular because coffee prices have risen sharply, and they were thinking, is this the next cocoa? Okay. And rightfully so. Again, fundamentals in the coffee supply-demand situation is very tight. We have Vietnam, which again, heat stress and dryness has caused a shortage of Robusta, which is the stuff you eat for a drink in espressos. So Robusta coffee is definitely tied in terms of supply-demand fundamentals. Arabica is produced in Brazil, but they also had a couple of years of bad crops followed by frost. You don't get frost in Brazil.
Exactly.
That's very abnormal. We've recovered from then, but then you had a bout of droughts, and you've just not had perfect weather, and this is a recurring theme.
Yep.
In the trenches of KD&F, are you guys basically meteorologists?
We do have one. I think any agricultural soft commodity trader has to have in-house meteorologists within the research team, and I definitely have one.
So like it's 9 o'clock at night and you're watching Juventus AC Milan or whatever you're doing, and you got your iPhones open to whatever your meteorologist thinks? I mean, it's that. You guys live and die by the weather, right?
So our meteorologist based in India, we're constantly getting rainfall updates in Brazil, in Colombia, in Vietnam.
Okay.
So it's
this has been a joy. Don't be a stranger. Come back on. Kona Haig, live with us in the studio from KDF, and man, just absolutely definitive on all the stuff we use each and every day. Futures deteriorate, -24. Intel and Tesla news this morning. We'll have that for you through the morning. Dow futures at -88. The VIX out a little bit, not much. 13.50 in the 10-year real yield, 2.17%. elevated ever so slightly. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. Adult films actor Stormy Daniels testified in former President Donald Trump's criminal trial. She recounted meeting Trump in 2006 and the subsequent payment and a non-disclosure agreement she entered afterward. That $130,000 payment to silence Daniels, paid by Trump's former attorney Michael Cohen, is at the center of this case. The federal judge in Florida presiding over the classified documents prosecution of former President Donald Trump has canceled the May 20th trial date, postponing it indefinitely. The order from U.S. District Judge Eileen Cannon. Loyola law professor Jessica Levinson says while the Supreme Court deals with the issue of presidential immunity, all eyes remain on Trump's New York trial.
We continue to look at the New York hush money trial as, frankly, I think the only trial that's going forward before the election. And depending on what happens in the election, potentially the only trial that moves forward at all. Because for the two federal cases, if Trump wins the election, he can ask his attorney general to dismiss them.
Professor Levinson spoke to CBS. The U.S. paused the shipment of bombs to Israel. It's over concerns that Israel was approaching a decision on launching a full-scale assault on the southern Gaza city of Rafah against the wishes of the U.S. Parts of the Midwest were hit with severe storms overnight with heavy rain, high winds, and some reported tornadoes. Tornadoes responded in Michigan, Indiana, and Ohio. Two twisters damaged Portage, Michigan. This woman lives there.
The house across my street from us, their garage is totally gone now. They're missing part of their roof. The house kitty corner from us has trees on top of it. My neighbor's house around the corner is almost completely destroyed.
Officials say, fortunately, there have not been any serious injuries reported. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
I'm going to tee up in a minute. I got the plague. I got the plague, folks. I'm fighting it
hanging in there.
I'm hanging in there. Paul's being patient. Michael Barr's not. But, David Gurrow walks in.
I saw it just well.
And, he's such a stud. He comes in from Brooklyn, and he's got tea here from Sacred Vibes Apothecary.
Really?
I mean, it's not Lipton tea.
No.
It's like some fancy herbal.
That's how David rolls.
How much is he getting paid? Because whatever it is, it's too much if he's buying that stuff.
It's spring herbal remedy. It's a spiritual herbalism.
Who?
They did Carlos Santana like nobody. And what's even better here, he was going to get me the cleanse package, but it's the fighter package.
Fighter package, right?
It's the fighter package. David Gurrow, thank you, and thank you to Sacred Vibes Apothecary for this
there
tea.
you go. Absolutely. David Gurrow, he's in Brooklyn. That's how the Brooklyn guys, that's how they roll, John. That's the kids are all in Brooklyn these days.
Man.
I feel like it's a fighter package.
That's what we need here on a Wednesday morning. A fighter
Pennsylvania
package.
Jacks, Pennsylvania, we follow Jack.
What's it called? A Stroh's beer.
That's it.
That's what I thought. David Gurrow, thank you. We'll look for him. The big take. Look for that pockets. Also rumored a return of Matthew Miller. Hot pursuit.
Could be back next week is kind of what the scouting report is saying.
It's just too much. Beard? Let's get the roulette on here. Barr wears a beard, but he's Michael Barr. Who knows? Matt Miller, sans beard. Good morning.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Futures indicate a lower open on Wall Street. Dow futures right now down 70 points, down 0.2%. S&P E-mini futures 21 points lower. That is down 0.4%. The Nasdaq futures right now 111 points lower. Uber Technology, those shares in the pre-market most active, down close to 9%. First quarter bookings missing estimates. Shopify shares, they tumbled in early trading. The e-commerce company in Canada saying gross margins will decrease as a result of the sale of its logistics business. And then word from Reuters that prosecutors looking into whether Tesla misled investors and consumers about the electric vehicle self-driving capabilities. And shares right now, they are lower in the pre-market, down about 4%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tom and Paul.
John Tucker, thank you so much. Futures in negative 21. Bloomberg surveillance this morning. It's brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges. No conflicts of your interests at ibkr.com/RIA. In 12, 5 years after the panic of 07, which is seared in my memory, my family got crushed in it, to be honest.
Really?
J.P. Morgan wrote a check, literally wrote a check, and the price of it was they had to set up a Federal Reserve System. It took 5 years to set it up, and of course, the hinterlands did not trust New Yorkers like Joe Weisenthal and Tracy Alloway. No. So they had to set up regional feds, and one of them was Richmond, which has had a character of its own from day one. The modern character was established by, among others, Marvin Goodfriend and a lot of Carnegie Mellon, what's called tidal and freshwater economics. And it moves on with Thomas Barkin. What a joy for Tracy Alloway and Joe Weisenthal to travel with Tom Barkin. They did two breakfasts. They did the Barney's Cafe breakfast, and then they did the Derby Restaurant breakfast in Mount Airy, North Carolina.
I'm looking at it right here on the map.
This is like a legit road trip. Like you guys went out to a Rotary lunch or whatever with Tom Barkin. That is this is like where the rubber eats the mold. Forget about Bloomberg, Mike McKee and all that. What was it like, Tracy?
I feel like I have to correct the record, which is that, in fact, we went to Waffle House, and I think, was it Biscuitville for breakfast?
Biscuitville for breakfast.
Nice.
And the Waffle House was for dinner, even though we ate breakfast food.
It was excellent.
In Nashville years ago, we called it Shea Waff.
Yeah, Shea Waff.
How was Shea Waff with Tom Barkin?
I was in Guatemala a couple of weeks ago visiting my mom. They have Casa del Waffle there. The exact same branding. I'm not kidding at all.
What did Tom Barkin say? What was the experience like?
So I think the interesting thing in this is that, you hear about Fed presidents like going out and talking to businesses, and they'll make references to this is what we're hearing on the ground. But what does that actually mean? Like, what are they actually doing to gather that sort of information? We know that they have all these official statistics, everything from non-farm payrolls to jobless claims, whatever. But when they're gathering that kind of color and anecdote, what does it actually mean? And I have to say, Tom Barkin, maybe because of his history as a senior partner at McKinsey, but he has that background experience, and that really seems to be a lot of his focus. It's going out and meeting people in his district and asking them things like, what are you seeing in terms of inflation? What are you seeing in terms of labor? What are you seeing in terms of availability of credit? And then using that, bringing it back to the FOMC.
So what do those people say in North Carolina, Joe Weisenthal, to Tom Barkin?
Yeah, there were a few different things. I mean, we talked to, for example, a manufacturer of carports, which I wasn't totally sure what that was until I saw them, but turns out this part of North Carolina is like the Silicon Valley of carports. Like there's so many companies, and they're sort of like the detachable garages, so to speak. It's like put over, sun damage. They were talking about how they're seeing very intense price pressure. So they're absolved from contributing to the inflation problems. They talked about how at their size, they definitely feel banks pulling back a little bit. So confirming that maybe the rate hikes actually are doing something to some extent. Most of the companies, I talked to two different textile manufacturers while there. Most of them seem like they're pretty good on labor now in terms of filling slots, but up and still and they have their own issues with childcare for their employees and housing. So a lot of these issues nationally, but hearing where they are directionally, which is what Tom said, which is that it helps to have these conversations to augment the data so that when we talk about something like, is there still more hiring left to do, they can get a sense of but how much does that really look like?
And also so that you can see the difference in the tails, right? So one of the interesting things about those two textile manufacturers, one was pretty big, one was pretty small, and the pressures that either of them are facing at this current moment are very, very different. The larger company seems to have some pricing power. The smaller company is really feeling the competition. So you don't get that when you look at aggregate statistics, right? You don't get that kind of discrepancy in the tails.
I got a lot of experiences. To me, it's a huge deal. I'm thrilled that you did this. There's way too much, I say it all the time, Paul. It's like a navel gazing from 3 zip codes in New York.
I know. You and I got to get off this island, Tom.
Bullard was big on this, out of Indiana University. You got to go out in the trenches and find out how apart, Joe Weisenthal, is America from those 3 zip codes in New York City.
Man, that could be a very loaded question. But what I would say is that I think one of the things that really struck me is that they experience a lot of the same things that people talk about, say, in New York City. Housing shortage is a really big one, but the dynamics sort of come at it from the opposite direction. Here, for example, we talk about, it's so hard to build new housing and stuff like that. There, the issue is they need to go out and pitch. The town development board needs to go out and pitch one of the major home builders to say, look, there is a case to build homes in Yadkin County, North Carolina, or Surrey County, North Carolina. And so I'd say many of the issues are the same, but the dynamics from which they emerge sort of becomes distinct. And so that's how I would probably answer it in the most safe way.
One thing we did learn is that childcare also seems to be an issue, even in smaller towns where you would assume maybe there's a sort of community-built source of childcare, but that doesn't seem to be the case. So we spoke to one project manager who is trying out this new model of childcare, and they were describing how I think availability of childcare had just dropped dramatically in that county. I can't remember the exact statistics, but I think it was over 50% since the pandemic. And that is very familiar to anyone with small children in New York.
Same thing. So I'm looking, quite frankly, I had to Google Map Mount area.
It's okay, we did too.
I know from Andy Griffin, but it is in the northwest part of North Carolina, a little bit northwest of Winston-Salem. It is in the western part of the state here. So when you were walking along the streets, Tracy, or in the Waffle House, how did the folks there feel about just the outlook? How are they thinking? What's top of their mind?
Yeah, I think the thing that I sort of came away with, and Tom emphasized this in a lot of his speeches to the local Rotary clubs or, local leaders and property developers and things like that, it's this idea that things don't go away that quickly. The scars of 2020 are still weighing on businesses, but also in places like Surrey County and Yadkin County, the scars of 2008 are still weighing too. That's one of the reasons there's a shortage of housing.
And the scars of 2000 and China's entry to WTO and the law. So it's scars on scars.
I knew there was a whole ulterior motive here. Tracy's doing front work for Light Sweet Crude. That's what's going on here.
The weird, there was a the gospel guitar store by a famous local gospel bluegrass artist, and we walked in, and our producer had his microphone, and we were all sort of nicely dressed, and I think we got looked at pretty suspiciously. But then I played a gospel song that I wrote on one of the guitars, and I think they warmed up to us.
Joe, what was the name of your gospel song?
It's called "It's Never the Wrong Time to Pray." I tweeted a 1-minute version of it.
The proprietor of the store liked it.
Yeah, and she was the daughter or the granddaughter of this guy. He was part of the Easter Brothers. Yeah,
right.
So she seemed to warm up to us after I said
So are we going to see? I need some news. I'm going to make some news today. Forget Tesla and Intel. June 7th and 8th, 2024. The Bluegrass and Old Time Fiddlers Convention. Are we going to see Light Sweet Crude there with David Gura?
I was just going to say, only when we got there did I realize that our colleague David Gura has this connection. I don't think we're going to make it down there, but hopefully David does. Maybe he'll report back.
We'll do that.
We'll record an episode of The Big Take from the Fiddlers Convention.
We'll have to see. Guys, great. Odd Lots with Tom Barkin. Look for that. Tracy Alloway and Joe Weisenthal. Ace, same time as Captain Tennille, real music.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance. I'm going to tear up here. Kona Hake with us from KD&F, Man in London, Brian Belsky in Moments from Toronto.
Everybody's out and
It's too
about.
much.
Yep.
He's with BMO. We're going to talk. We're going to get right to it because he's got some important things to say, particularly on real estate. Little lightness to the market. Tesla headlines, Intel headlines, this headlines, that headlines. The VIX 13.47. Oil. It's just sort of like we're churning. We're waiting for data, inflation data next week as well. Bloomberg Surveillance this morning. Brought to you by BNY Mellon Insight. Let me spell it. Insight, I-N-S-I-T-E. Insight, June 4th to the 6th, Nashville. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Insight.bnymellon.com. We're on Apple CarPlay, Android, YouTube. Paul, the live chat here.
You're all over it.
It's like
talking with the kids out there.
Yeah, I mean they're in the commodities, and I don't know, the contractors show up about it. Now, excuse me, folks, I'm fighting the plague. The Bloomberg Business Flash.
I'm
John
glad
Tucker.
we're in a hermetically sealed room with you then.
There we go.
I got it out. Okay.
So Paul's going to be out tomorrow. I'll be out the next day, is what
Brian
you're saying?
Belsky will
Brian's
be
going to be out for the
Thursday.
week.
John Tucker with the Bloomberg Business Flash. What do you
All
got?
right, right now, futures under pressure, indicating a lower cash open on Wall Street. Dow futures 60 points lower. That's down 0.2%. S&P E-mini futures, they are down 20, down about 0.4%. The Nasdaq futures 110 points lower, down 0.6%. Let's go through all the headlines. Reuters reporting prosecutors in the U.S. examining whether Tesla committed securities fraud or wire fraud by misleading investors and consumers about the self-driving capabilities of their cars. The Justice Department examining other statements by CEO Elon Musk suggesting the cars can drive themselves. Given its weighting, Tesla shares right now down 3.5% pre-market. And we've seen some volatile trading in the pre-market as well. On the earnings front, Uber reporting earnings this morning. Those shares, they are down right now about most actively traded, down 8.7%. Gross bookings in the first quarter missed analyst estimates. And then we also had Intel telling us that it now expects second quarter revenue below the midpoint of $12.5 to $13.5 billion. Intel shares, they are down 2.2%. And also, it's worth noting that the Reichsbank, they cut, and that could be the impetus for further cuts in Europe by the central banks there. As we look at yields, 2-year, that is unchanged, 483, and the 10-year, the benchmark, is 2 basis points higher. That's at 448. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. Worst job on Wall Street, without question, Nicholas Rocanova. He has to put up with Brian Belsky as they write. And folks, what you hate about Belsky for years, and you know, his bio says he's been doing this since 32 years. He's 12 years old, and he got a job at OPCO. He talked his way into it a few years ago. And the problem with Rocanova and Belsky is they write these hyper-detailed 4-page notes that you get your pencil out, the surveillance pencil, and you take forever to read them. And what gets my attention, Brian Belsky, it's just simple. This headline: real estate has become oversold. Have you gone long office buildings?
Good morning, Tommy. It's wonderful to see you. By the way, it's 35 years. I'm the Doogie Howser of Wall Street. And you should all pray for Nick Rocanova. He's worked for me for 17 years.
It's the worst job on Wall Street.
It's the worst. I stole him from the fixed income desk at Merrill. I mean, obviously, you know, you have to, as an equity guy that is typically and historically bullish, you need to have that other side.
You need to have an adult that can
you need an adult
you.
in the room. You need an adult in the
Okay.
room. And so my entire team, I've kind of put together as kind of more fixed income and banking people just to kind of keep me.
So what does Rocanova say about real estate? You're really going long office buildings?
Yeah. So here's the deal. We're maintaining our neutral rating. We own, the good thing about what we do is we have the opportunity to put our money where our mouth is, Tom, where we own and run $7.2 billion of assets at BMO, meaning from a separately managed account basis, we run 10 portfolios and 2 ETFs for asset management. And so separately, we own 16 REITs across that board. Obviously, Canada is a very big REIT market, but so too is the United States. So where are you going with this, Belsky? So think differently if you have the analysis to back it up. And I learned that from, first off, William O'Neill, as we've talked about through my time with you through the years back in the early 90s, and then Dane Bosworth. I worked for a gentleman by the name of Bob Dickey that taught me how to be contrarian. And the best book that you can read for investing has nothing to do with investing, Tommy. It's The Art of Contrary Thinking by Humphrey B. Neal. It was before World War II. If you have the analysis to back it up, be different. So I was marketing a few weeks ago in New York, and this client was really pushing me, and I love that, right? Because that's how you think differently. Like, Belsky, what are you contrarian on right now? So when you take a look at valuation, Tom, operating performance, earnings, and overall relative performance, REITs are there, right? REITs are there. Everybody hates REITs. We're convinced that we're never going back to work again. We're convinced we're going to have a commercial real estate crisis. We're convinced that Prologis is never going up again. But look at the results of Simon Properties. Look at the results of some of these REITs. We think thematically, again, we're talking 2.5% of your portfolio out of $100, right? But I believe, again, let's go back about the call. We think we're in a 25-year secular bull market. On a near-term basis, we think the market's overdone here. We think there could be a bit of a pullback. Our theme for investing in 2023 is everybody love everybody. Own a little bit of everything. And we think we've entered into the most dynamic stock-picking environment in my career. The closest thing I would say is 1995, 96. Maybe 83, 84, but really 95, 96, where it was all about stock picking. And we did have asset classes move together: growth, value, small cap, large cap. So that's why REITs, we think, from a valuation perspective, they're clearly oversold and they're clearly hated. And overall, we have now reared an entire generation of investors, Tom. The last 17 years, they only believe that stocks go up if interest rates go down.
All right, so what REITs do you like? I see American Tower. I took that company public back in the day. What else? Talk to us about REITs. What sectors of the REITs? Because a REIT is not a REIT is not a REIT. There are all so many different categories.
So we like, actually, if you take a look at Prologis earnings, they were terrible, right? But if you take a look at going forward, we'd like that name when we've owned it for a while in terms of where the cash flow is and where the growth is. We've owned Simon Properties in different portfolios in different firms since 2008. When we came to BMO in 2012 and we put our product together in terms of our separately managed account, it's one of the first REITs we bought. And we're longer term holders in terms of how we look at things. We also like two small mid-cap companies, Park and Cube. And we like the Cube because of the storage side of things. And we think, especially in the New York metropolitan area, we think it's an area, it's a theme that works. Very broadly, technology REITs, industrial REITs, healthcare make a lot of sense.
So what is your call on office?
Our call on office is we're going back to work. And we're starting to see reimaging in the office space too, much like we saw reimaging of retail space post the great financial crisis. I know it's expensive, but I think it makes sense, especially given we need more housing in this country.
I've got to ask you, just because of the timing, Bethany McLean at Business Insider out with a lengthy effort on Blackstone and their real estate. Now, I'm assuming the private equity, private debt of Blackstone is removed from the REITs you're looking at. But in your call on real estate, can you roll that over to Blackstone recovering?
Yeah, well, first off, Blackstone got crushed, obviously, in 2022 when rates were going up, right? Private equity doesn't work when rates go up. And then it obviously reversed. We bought it, and talk about contrarian, we bought it in October of 2022. And obviously, we were very happy with the return on that.
50%, I think, right?
Yes, we're very happy with that return. Now, I think you want to really, and this is where stock picking comes in, right? You have the macro with the interest rate scenario. And we've also shown in our work that in a 50 to 100 basis point change in the 10-year Treasury, REITs outperform. Now let's talk about Blackstone. I think from a private equity perspective, just in terms of their business and the lending side of things and the alternative lending space and with respect to private equity, I think that works. In terms of the real estate side of Blackstone, I think it's right in the sweet spot.
Brian Belsky on Apple.
Oh, listen, so I was very blessed at a young age. Again, 12 years old. In 1990, I met Warren Buffett. Well, I met Warren Buffett at William O'Neill and Company in 1990, and then
Becky Quick was there. Continue.
Yes, actually, Becky Quick. I ran into Warren Buffett and Becky Quick in 2017. He looks at me, and goes, "Hi, Brian," and he said, "I met you in 1990. How amazing is that?" Anyways, very humbling. Anyway, follow the money, Tom. Follow the money. Got to follow the cash flow. You got to follow the earnings.
Right.
I believe Apple's been very humble in terms of what it's been doing in AI. And don't underestimate how important this kind of joint venture with Google is with Apple. I love Apple stock. It's actually one of my top holdings across all of my portfolios.
Brian Belsky, BMO Capital Market. Thank you so much. Too short a
Thank
visit.
you.
Let's do it again soon and often.
Thanks, Tommy.
Well. Futures negative 20 Dow. Futures negative 57. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. Porn star Stormy Daniels will resume testimony tomorrow at former President Trump's New York hush money trial about a sexual encounter she says they had in 2006. Daniels says the encounter led to her being paid off to stay silent during the 2016 presidential election. Yesterday, Trump sat just a few feet away from Daniels as she described their alleged one-night stand. Legal experts say while the case is not about the alleged encounter between Trump and Daniels, those details may be important for prosecutors to lay out their case. Criminal defense attorney Arthur Idella.
They don't have to prove beyond a reasonable doubt they had sex. They don't have to prove beyond a reasonable doubt that they even knew each other. They have to prove beyond a reasonable doubt that the checks were cut, that it was decided to put it in the book improperly, and then or like label it inaccurately, and that was being done for election law fraud.
Meanwhile, Donald Trump's criminal trial for allegedly mishandling classified documents has been postponed indefinitely by U.S. District Judge Eileen Cannon in Florida. It's a blow to the Justice Department's efforts to obtain a jury verdict before November's presidential election. The U.S. paused a shipment of bombs to Israel over concerns about a potential military offensive on the Gazan city of Rafah, which President Joe Biden opposes. According to a senior administration official, the delivery was supposed to contain 3,500 bombs. Days after Texas Congressman Henry Cuellar was indicted on bribery, money laundering, and conspiracy charges, the Democrat is publicly denying all allegations. Federal prosecutors allege Cuellar and his wife accepted bribes in exchange for influence in federal legislation and regulation. Reporters caught up with the congressman.
Those are allegations. My wife and I are innocent, and all I've done is to serve my district.
Representative Cuellar went on to say, "We will let the attorneys take care of it." Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Bloomberg Business of VAR. I mean, Mike, help me here with the Knicks, Indiana. I guess they're going to go at it again. Does every game end with a controversial call where the NBA has to wax philosophical for 2, 3, 4 days?
Well, let's hope there's no kickball in this game. So, yeah, listen, this has been going on for the Knicks. You know, the refs have had, their controversy. Did you call this? Why shouldn't you call that?
Is it new, Michael Barr? Is it new?
This has been going on since 19 Dirt, and it will continue to go on.
Okay.
There you go.
How do they look? They beat the Pacers.
I mean, they have great defense, and the Pacers are great in offense, so it's...
If they get 2 more injuries, Paul, they're calling
Exactly, they're calling me in.
We'll have to see. Futures in negative 20 from New York. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Futures right now indicate a lower cash open on Wall Street. Dow futures 47 points lower, down about 0.1%. The S&P E-mini futures down 19. That's down 0.4%. The NASDAQ futures right now 107 points lower, down about 0.6%. Partly in the driver's seat, some of the earnings this morning. Uber's first quarter bookings missing estimates, pushing its shares right now in the pre-market, most actively traded down 8.1%. Shopify shares, they tumbled in early trading. The e-commerce company saying gross margins will decrease as a result of the sale of its logistics business. And then we had word from Reuters on Tesla. Those shares right now in the pre-market 3.6% lower. Reuters reporting Tesla prosecutors in the U.S. Trying to figure out if Tesla misled investors and consumers about the electric vehicle's self-driving capabilities. And then this could be a cue for the rest of Europe. Important to note this morning, Sweden's Riksbank kicking off its rate-cutting cycle, easing policy for the first time in 8 years. Two-year yields in the U.S. right now unchanged, 4.83. The 10-year is up 3 basis points. That is at 4.48. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Tom and Paul.
John Tucker, thanks so much. Paul, it was like, end of January, hot stove league February, and I'm reading the Boston Globe, and I'm miserable. The winter's out, and I'm talking to Emily Roland, and I go, Emily, you just should come to New York and hang out. And she goes, I'm not coming to your show until the Red Sox have the best pitching in Major League Baseball. This is a shock of the year. The Boston Red Sox, picked for last, have the best pitching in Major League Baseball right now.
How'd that happen?
And they're playing 500 ball, which, tells you what the hitting's doing. But we are thrilled. Emily Roland here with John Hancock of Boston. And I should also point out, she's got the best call, which is just own America, own quality.
Boom, I'm down with that.
Stop screwing around. Do you stay with that theme?
We do, Tom, and it's really all about following the earnings and following where the best fundamentals are
following
across
the cash
world.
flow.
Follow the cash flow. And not only are we seeing U.S. mega cap tech companies, yes, they're overvalued, but they're doing the bulk of the heavy lifting right now as far as earnings growth goes. It's a key reason that we've had a preference for U.S. equities. We're also following where the money's going. We are spending like crazy in the United States right now. Not a political opinion, it's just happening, and it's really unusual that we're employing fiscal stimulus and increasing the size of the deficit at a time where the unemployment rate is less than 4%, but it's being funneled into industrial production. There's a manufacturing renaissance taking place across the U.S. Midwest right now. So we're playing that by emphasizing things like mid-cap industrials in portfolios.
So we're pretty much, 80, 85% of the way through earnings here. What have you seen so far that's either giving you conviction in that call, or maybe you said, we got some headwinds?
Yeah, earnings have been okay. They remind me a little bit of my son's grades. He's in 8th grade.
Don't go there.
His report card's not very good, but he's still on the lacrosse team right now. Go Marblehead. They've been fine.
Mm-hmm.
But when you look at it, it's almost like I picture like a glacier, right? How only the very top part of it is showing. And it's really those mega cap tech names, communication services, consumer discretionary. Those sectors are up 30, 40% year over year, handily outpacing the S&P 500, which broadly is up only about 2% when you take those sectors out. So earnings has been fine, but again, they're dominated by select groups of companies.
So how do you think about valuation then? Two ways to look at it. One, you just kind of look at the broad market. Maybe we're a little bit rich. Yeah. A lot of folks say, hey, pull out some of those magnificent, however they are, and we're okay. How do you guys think about it?
Yeah, it's really about a balance. So we have a valuation issue with those mega cap tech names. In fact, right now, the S&P 500 Growth Index is trading at a 45% premium to its 20-year average. So we still like tech. We're not downgrading it, but you've got to balance that with stuff that's actually trading on sale.
John Hancock, with his venerable tradition, actually sticks to prospectus. Are your large cap portfolios forced to sell big tech because it's gone up so much?
Well, that's a big problem for active managers because it's hard to be overweight those stocks. So I think there's some limitations there as far as sector construction. What we're doing is we're balancing that with carefully selected parts of value. Think of it as like quality at a reasonable price. Those are the types of stocks we want to own, ones with great balance sheets, tons
Such
of
as,
cash,
I don't mean
great
stocks,
return on
sectors.
equity.
Give me sectors, come on.
Yeah, so we're overweight the information technology sector. We also like things like industrials, which we talked about, which have good earnings prospects. They're high quality, great return on equity. We do like healthcare. Sometimes I don't love talking about it because it's been an area that's been overlooked.
Why won't healthcare finally go? I mean, you and I were younger, Paul, when people started talking about this. Why won't healthcare pop?
I think you just need to see that rotation into more defensive parts of the market. And think about what's outperforming right now. You look at Bitcoin, crypto miners, small cap equities, Chinese equities. It's like there's this massive momentum trade that's been spurred by this risk on sentiment. And it's really been just around the Fed hinting last fall that we were going to cut rates, and then kind of reiterating that message a bit last week when we heard that we're going to, kind of start reducing quantitative tightening and those other, measures that are more dovish. So I think we've been thinking about this environment like a phase. And I've been thinking about, I don't know if anybody's ever had teenagers in their house, but they can go through these like phases, which can be weird and erratic and hard to understand. And that's kind of what it feels like right now in markets, is you're having decelerating economic growth. The April data are not that great, but markets are rejoicing because it's reviving hopes that the Fed can start cutting. So we're in a phase that we're trying to get through and kind of ride out right now with those higher quality stocks.
How about on the fixed income side? Do I sit in my 2-year Treasury at 4.84%, or do I take some credit risk out there?
I'm so glad you asked that. Bloomberg is the place to talk about bonds, and I love that. It's pretty remarkable to see some of the volatility in rates. I don't think it's been talked about much. We just saw the 10-year Treasury yield fall by about 20-25 basis points in just over a week. We look at any backup in bond yields as really attractive right now. You think about the aggregate bond index yielding 5.3%. That's pretty awesome. I mean, that's actually close to the 20-year high of about 5.9% and well above the 20-year average of 3.25%. We like income.
Now, you're doing lacrosse at Marblehead. Is that what I just heard?
That's right. Yeah.
How many summer camps is a cherub going to? What a racket.
They
go to Walt Disney. Are they going to Dartmouth to the Mountain Dog?
We are looking at some lacrosse camps this summer.
Do you have a consultant?
I know, right? It's unbelievable. I need another job.
You do? Yes, you do. Trust me.
Yeah.
But you're looking at, 3 or 4 camps.
Yes, all the elite colleges, of course, will take your children for a week of lacrosse instruction. Doesn't even matter if they're good, by the way.
Textbook's not included.
Exactly.
Does Duke do this, Paul? Duke must have a lax
Of course,
cap.
Lawrenceville does it. They all do it. Yeah. So got to keep those.
I looked up Tabor. I figured the trek from Marblehead down to Tabor near Cape Cod wouldn't be too much. They don't have a lax cap. They take your money in ice hockey.
Exactly. So Marblehead, what's that, like 45-minute drive, hour drive to Boston?
Well, and on a Sunday morning, it's about 20 minutes.
Okay.
But on a Monday morning, it's a different story.
Okay.
They got a
13
great
miles.
folky coffee house up there.
Do they?
It's up there. It's Salem.
It's right on the water, right? Like Salem?
Yeah,
that kind
Yeah, exactly.
Yeah, it gets warm about July 15th.
Yeah, exactly. That's when their season
We're the
starts.
sailing capital of the world.
Is that right?
Well, some people say Newport, but Marbleheaders claim it's us.
It's
yes.
like the real sailing.
Real sailing. Okay.
Hinkley and all that.
Yep.
There you go.
All right.
Do you have the picnic boat? I mean,
that's like my dream boat, Tom.
That's your dream
the
boat?
Hinkley picnic boat.
Tom Porcelli, when he took his job at PGIM, he asked, and he takes a picnic boat down the Hudson River every morning.
Every day.
My husband's a fisherman then, so he can't have that.
Okay, well, yeah, but a picnic boat. I could see you in a picnic boat.
Oh, right?
Yeah,
Let's do Marblehead in August.
We should.
Okay.
Come on up. Remote broadcast?
Yes.
Yeah. Emily Roland, John Hancock, Road Trip. Thank you so much.
Thank you.
She does the equity markets, and we did gloss over it, but she has been dead on about the recovery of this market to another leg of a bull market, particularly in quality stocks. Paul's Intel a quality stock this morning?
I don't know. I mean, you think about what's happening with the chip stocks, and they're just not there yet.
They remind me. I don't mean to compare them, but the decade-long Boeing disaster.
Yep.
Interesting. We'll have much more on this. Look to Edward Ludlow, Bloomberg Technology, for coverage on that. From New York City, Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with the opening bell report at the New York Stock Exchange. There you have it, the opening bell. And this comes as futures all morning long. They have pointed to a lower open on Wall Street. And as we look to the Dow Jones Industrial Average at the open, down 65 points, down 0.2%. The S&P 500, 20 points lower. That is down about 0.4%. Still waiting for the first trade for the NASDAQ. Uber shares right now, after their earnings report, 7.8% lower. Gross bookings missing on soft demand in Latin America. Increased legal costs, cut profitability. And then you have shares of Intel in the early going down 2.1%. The second quarter revenue to fall below the midpoint of the previously issued projections. That's because of a new U.S. ban on chip exports to Huawei. Right now, the NASDAQ, the first trade down 0.6%, 103 points lower for the NASDAQ Composite Index. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is the opening bell report. Tom and Paul.
John, thanks so much. Joining us now, the former vice chairman of the Federal Reserve System with PIMCO, and of course, forever herder of cats at Columbia University within their Department of Economics. It's going to be a 4-hour conversation, and we're only doing it a short block this time with Vice Chairman Clarida, but we'll make it a much longer conversation next time. I want you to recapitulate your Economist article of 7, 8, 9 months ago, where you shook the industry by saying, forget about 2.00%. It's going to be some number higher. Revisit that right now.
Well, thank you, Tom, and always great to be on the show, especially in studio. Yeah, in that essay, I highlighted that that I thought the Powell Fed and really global central banks were really aiming to get inflation down to what I called 2 point something. And the idea was inflation was up to 5, 6, or 7 at the peak, and the goal would be to get it in the zip code of the inflation target. But in terms of dealing with the last mile, to let the economy sort of get to the last mile on its own without another leg up in rate hikes. And that's what I think we're seeing in the U.S. and really around the world.
Is the Fed restrictive now? The polarity of market economists we speak to is there's a select group saying, you know what, they could go up further and then come down. And there's others saying, stop it. They're way above the real rate. Bring it down now. Which is it?
They think they're restrictive. I think they're restrictive. I think there can be a debate on how restrictive. The Fed's thinking, which I think makes sense, Tom, is that the longer they keep rates here, and importantly, the longer they signal they're going to keep rates here, they will become more restrictive. And so, yes, I'm certainly in the camp that they've done enough. And the real question is, how long do they have to keep rates at this level?
Rich, Tom and I will speak to people both in academia and in practice that says, the Fed should be cutting now. If you look at the real-time data, inflation is maybe not whipped, but we're pretty darn close, and we should be cutting rates now. How do you think about that?
If I were still in the building, I would not be in the camp to be cutting now. It certainly looked like that was feasible coming into the year, but since the beginning of the year, the inflation numbers have been going in the wrong direction, and also I think that especially I think what's relevant here is an element of risk management. So I think there is path dependence. The fact that the last 3 years inflation has been well above target, I think it makes it a harder call to cut preemptively. So I do think, sometimes central banks say they're data dependent and they're not. I do think the Powell Fed now is data dependent, and I think they're ready to cut if the inflation data starts to proceed as they expect.
How do you think this Fed is looking at the labor market? I mean, Tom and I, we kind of throw out this term. It feels like we're at full employment. Everybody who wants a job kind of has a job. Yeah. Wages are going up and at a pretty reasonable pace. How do you think the Fed looks at the labor market today?
I think they see a labor market that is robust by a variety of measures, not just the unemployment rate, but other indications, and that's a good thing indeed. I think one of the first speeches I gave as vice chair, I made the point, the Fed is not targeting wage inflation. It actually likes it when folks get a nice raise, but raises have to be consistent with the inflation target. And we've gotten some good news on productivity in the last year. Productivity growth is now around 2%. And 2% productivity growth with 4% wage increases, if sustained, gets them pretty close to where they want to be. So I don't think there's a lot of adjustment required in the labor market from here.
If you're joining us right now, Richard Clarida, former vice chairman of the Fed, and of course with Columbia University. You're a certain kind of monetary economist, of course, with DSGE with Jordy Galley. And I think of Meghnad Desai over at the London School of Economics, coming from a totally different world. Lord Desai got so upset about our fiction of equilibrium that he wrote a book about it, 2008, 2009. In DSGE, there's a respect for Walrus in some form of normal equilibrium. How can we measure equilibrium now if we don't have a clue what productivity is doing? I just don't buy it.
Well, I think we measure it with pretty big error, Tom, and you're absolutely right that not just productivity, but a lot of inputs into theoretical DSGE models, R-star, term premia, equity premium are all unobserved and measured with error. So I always thought, and I've said this on your show, and I've said this in the halls of the Fed, models are a place to start, but not to end the conversation. And in particular, folks would criticize, say, DSGE, that they're 3 equation models. Well, I think every economy needs to have at least 3 equations, but there are a lot more. So Tom, it's a starting point, but it's not a destination to get to the answer.
But the 250 PhDs, whatever it is at the Fed, at least, they've all studied Clarida, Galley, Gertler, and the rest of it. I get it. They've studied this stuff.
Yeah.
Is it germane right now? Our listeners say, you got to be kidding me. After the shock of a pandemic, a triple stimulus, throw the equations out. Does Chairman Powell have equations now that are effective, that have some form of use?
My sense, obviously, from public comments of not only the chair but the committee, is that they've understood, Tom, for some time that the shock was sufficiently unusual and substantial that they can and they are relying less on models and more on the way the data evolves. Tom, on one hand, the models were telling them that to get inflation down from 5.5 to 2 point something, they'd need to have a big increase in the unemployment rate. And both Governor Waller, Chair Powell, and others said, look, the economy may be different this time. We don't have to assume a big cratering in the labor market, and that was actually a positive development.
I can't say enough, Paul, how I agree with this. And then Powell's been hit like a piñata. Powell led saying, do we really trust these equations? And Clarida, who invented the equations at Columbia, Stiglitz, they got their equations. Some of them are real simple, like Stiglitz and Grossman, and others like Clarida, it's Greek to me. Yeah. But the answer is, do they matter right now? And Powell's led on this.
I know, and Tom, one of the key issues for a lot of folks is the consumer here. I mean, there's a tale of 2 cities, if not more, out there with the U.S. consumer. A lot of folks are really struggling, particularly if they don't own assets, whether it's real estate or stocks or bonds and things like that. And how does the Fed think about the consumer here? How do they gauge how the consumer's doing? They look at the earnings from Walmart. I mean, what do they do?
Well, the Fed staff devotes a lot of resources to the consumer, not only at the aggregate level, what is total consumption, but also increasingly during the time I was there, focusing on the distribution, both income and consumption distribution across the population. And there are a lot of things that you can monitor, in particular, how many households are late in their car payments or credit card payments. And so certainly the Fed spends a lot of time on the bottom-up analysis of the consumer.
So again, we came into the year, Richard, I mean, the market was discounting 6 rate cuts. Now we're down to less than 2. I mean, the market has no idea what's going on out there. Is the Fed, from your perspective, are they happy to say, hey, we've done a lot of work here. We've raised rates. We had a major impact on this economy. Let's just wait and see how our work plays out. Is that kind of where we are, do you think?
That's exactly where they are. In fact, the chair got that question at the press conference, and I'm paraphrasing, but his answer was along the lines of, we judge that policy is restrictive, and we judge that if we keep it here long enough, it will be sufficiently restrictive. So that's definitely their mindset. They're data dependent in terms of when the cut and how many cuts are going to happen, but they certainly judge that policy is restrictive here, and they just have to keep it here.
One of the great moments now in economics, Professor Clarida, is your colleague in crime at Columbia, Joseph Stiglitz, Nobel Prize winner,
Yeah.
is out with a wonderful new book, very thought-provoking, should be read by conservatives, The Road to Freedom, Economics and the Good Society. You two are both victims of the Midwest. And one of the great advantages here is Clarida and Stiglitz are like, would everybody calm down? There's a whole nother country out there.
Yeah.
Tell me about policing as Dean of Columbia Economics, Joe Stiglitz. I can't fathom that is your day job. What was it like telling Joe Stiglitz, you will teach this course?
Well, no, look, Joe is a treasure, and I'm actually proud of the fact that when I was department chair back in 2001, I recruited Joe to Columbia. It was one of my big accomplishments. I'm an enormous fan of his research. He's an incredible colleague, incredibly creative, and I just wish we had 50 more Joe Stiglitzes, with or without the Nobel Prize.
Why should conservatives read Stiglitz, The Road to Freedom?
Well, I'm reading it now. I listened to a podcast the other day. Look, it gives, I think, an informed and nuanced assessment of the power that economics can have about thinking about the world if you're willing to step away from the oversimplifying assumptions. And much of Joe's career has been driven by a curiosity about the world and providing a structure to think about it.
How do you think about this U.S. economy? A lot of we hear recently about the exceptionalism of the U.S. economy vis-a-vis Europe. Let's think Germany, or Asia. Let's think China. Is this something that's unusual, this kind of decoupling, if you will, in terms of performance?
You know, that term means different things to different people. What is clear, I think, is through the rearview mirror. Last year, many predictions of a recession. Not only did a recession not happen, but growth was a point above trend, a very hot labor market. I think part of the exceptionalism theme relates to excitement about AI. AI is a big deal. It's not clear if it'll be a big deal in the next 6 months or 6 years, but it is a big deal. And obviously, U.S. companies and U.S. innovation are poised to benefit from that. But there's another dimension, I would argue, in which the U.S. is exceptional, but in a poor direction, which is that we have an exceptionally irresponsible fiscal policy. And if you look at the CBO numbers, they are frightening. Essentially, deficits of 5, 6, 7% of GDP as far as the eye can see. So exceptional in multiple directions, I would say.
One final question.
Yeah.
We have a presidential candidate, a former president, who basically wants to take the independence of the Fed away. From your reading of our political economy, can a single president remove Fed independence?
Certainly not. I think the legal standing of that issue is clear and decided. And I would 2 points. One, Jerome Powell will serve out his term, which goes through May of 26. Secondly, there are no vacancies on the Federal Reserve right now. So for the foreseeable future, there's nothing for a future president to do on that account.
This has been fun. Did we do okay?
Yeah.
We quality C.
Yeah, gentlemanly C. I'll take that.
Richard Clarida, thank you so much, of Columbia University and, of course, the Fed, and with PIMCO.
Thank you, fellows.
As well, just really, really wonderful. It's great to do this not on a Fed day.
Yeah.
It's like, what's the Fed going to do?
Yeah.
And all that. Bloomberg Surveillance this morning. We're brought to you by BNY Mellon Insight. June 4th to the 6th, Nashville, Tennessee. Don't miss the essential event. For the financial advice community, visit insight.bnymellon.com. Let me spell that for you. INSITE, insight.bnymellon.com. We thank BNY Mellon for their support. We thank PIMCO for dragging over Richard Clarida here today, not on a Fed day, well. Futures are, we're open for trading now, I should say, and we've improved off of futures. Down -14 SPX fractional. From New York City, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, the major stock averages right now lowered a little change in the early going. 9 of the 11 major industry groups in the S&P 500 are down. Biggest drag coming from consumer discretionary. That's where you're going to find the shares of Tesla. Tesla under scrutiny by prosecutors over whether it committed securities or wire fraud related to its self-driving claims. That's the Reuters report. We should point out we've known about this probe, the investigations, for some time. Uber dropping close to 5%. Gross bookings missing on soft demand in Latin America. Intel, the biggest laggard in the Dow Jones Industrial Average. The U.S. has revoked licenses allowing Huawei to buy semiconductors from Qualcomm and Intel. That's according to our sources. Shares of Intel 2% lower. Qualcomm shares, they are down 0.75%. Overall, the S&P 500 down 10 points, a decline of 0.2%, 5177 on the index. The Dow Jones Industrial Average down 17 points, and the Nasdaq 100 right now 45 points lower. That is down 0.3%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
Thanks so much, John. Mick Mulroy joins us right now. Senior fellow of the Middle East Institute, not in acquaintance with public service to the country, former Deputy Assistant Secretary of Defense for the Middle East at Defense, and also his effort with the Marines over many a year. Mick, thank you so much for joining again. I believe, Mick, the way they do it in the Marines is they say, get out the map. I don't think enough Americans have gotten out the map of southern Gaza, 3 miles from Rafah up to a Mediterranean Sea as a constraint, and maybe 9 miles south to the tip of Gaza into a desert in the middle of nowhere. If your world is the study of degrees of freedom, where do those people move in Gaza?
So it is very good to be with you guys as usual. It's very difficult. There's no doubt about it. The population that we're talking about inside Rafah, over 1 million, so about 1.3 million, are largely there because they've relocated from other areas of Gaza, including all the way up to Gaza City, Khan Yunis. And now I think where they're looking is a coastal area, predominantly because Hamas isn't in the coastal areas because you can't dig tunnels there. So they're trying to move this large population, and I think around 50,000 have already moved in the last 2 days, to this area to get them out of the path of either a full-scale or limited ground operation to basically address the last 4 battalions of Hamas terrorists in that region.
You mentioned 1 million people, take away 50,000. I'll let Mick Mulroy do the math, but the answer is, in the next coming days, how do you move that many people? I can't visualize it. Mick, help me.
So it will be difficult. I've seen some assessments it would take up to 12 days, but if you do your math, it doesn't seem to add up right now. But the other thing I'd point out is Israel doesn't have to set an arbitrary timeline. Their timeline could be, if they elect to do the Rafah offensive, and there's certainly some serious opposition to this, but if they're going to go ahead, they could base it off of when civilians are out of harm's way, because it does look like they are voluntarily moving, and some, quite frankly, really quickly. So I hope that if they do go ahead, and that's obviously a choice that they're going to make, that they do allow all the civilians that they can get out to a location where they can also receive humanitarian aid. It's obviously difficult to convince people to move to a place where there's no food, clean water, or the medicine they might need. So it is a very complicated situation to point of your first question, but it needs to be done if this offensive is going to take place.
Mick, after the October 7th attacks, the Israeli government said their strategy was to basically eradicate Hamas. We're 7+ months into this. Is that even possible? I mean, we asked that question 7 months ago. Is that possible? 7 months into it now, is that even possible?
So that is a good question. You can never really eradicate a philosophy, which means people can join Hamas or whatever comes after it. I think they should have been more specific, and certainly given the IDF more reasonable objectives, which is to the military destruction of Hamas, which means obviously taking out the military leadership, depleting their soldiers, if you will, their terrorists, but also destroying the weapon systems that are so dangerous to Israel, and these tunnels, which are a strategic problem that most militaries have not faced to this scale in this type of operation. But if they could degrade those significantly, then I would think that would be a reasonable objective for the IDF. Destruction of a philosophy, a terrorist organization. We've seen it with our efforts in 20 years. We have not done that. So that is not likely to happen.
And Mick, Peter Baker in the New York Times, and among many, many other headlines, including Bloomberg, the President of the United States puts arms shipment to Israel on hold. What does it actually mean?
So if you look at the growing, I think, concern, but not just the White House, but even in the Pentagon, about how the war was being prosecuted, a lot of it has to do with the use of large diameter bombs in urban areas. So 2,000-pound JDAMs has a kill radius that is substantial. So even if you're targeting militants in one particular block, you could be taking out 2 or 3 blocks. And I think that has been some of the major concern. Those are what the weapon systems, I think, that have been stopped from going to Israel right now because of this Rafah offensive. It may be in the future they condition it. You can use these weapons, but not in Gaza. I don't know if we're there yet. The quickest way to do that is simply stop those weapons from being shipped to Israel right now, right before the Rafah offensive.
All right, Mick, just strictly from a military perspective, how do you think this plays out? I mean, if your goal is to get every last Hamas fighter, you could argue no end in sight here. How do you think this plays out from a military perspective? Because the Israeli Defense Fund, they know what they're doing.
They do. Absolutely true. But you're right. You're never going to get every Hamas fighter because every day there's new Hamas fighters. And as soon as you leave, there'll be new ones. So I think it is really to go after their capability to wage violence against Israel. So major weapon systems and every other weapon systems you can. The leadership, because leadership really matters. I mean, we could see that on October 7th, unfortunately. And these tunnels. These tunnels do give them a capability that is unlike most terrorist organizations. So I think if you can degrade that to a point, and then you have to come up with a plan that is attainable and sustainable when it comes to ceasefire. Because everybody's talking about it now as this is what Israel needs to do. But the question is, as soon as they sign the agreement, how long is it going to take for Hamas to then violate that agreement? Because their purpose in life is to attack Israel.
Mick, I got to squeeze this in. Your effort is My Star in the Sky, about children forced into soldiering in Africa. This is something you've really led on worldwide. Just quickly here, how big is this issue?
Well, thank you for bringing it up. It is a big and growing issue. In the last few years, it's doubled in with the amount of children being forced to fight in the Middle East. The issue you're talking about is a documentary that me and my partner, Eric Ulrich, did on the Lord's Resistance Army. It's being made into a book. It is made into a book, and it came out yesterday. Right. So I really appreciate you bringing that up, because a portion of the proceeds goes to our NGO in child soldiering, which really addresses this issue, not only to stop it, but to help rehabilitate those children that have been forced to fight. And that needs to stop immediately.
Mick, thank you. Mick Mulroy with us there on Gaza and what we see in Rafah. Mark Sullivan's All the Glimmering Stars is the book. Markets do better here. Off of futures, we're pretty moldy, but we've come back nicely. That's been the theme the last 4, 5, 6 days. Reminds me of the markets back, and I think it's 1975-ish.
Oh, boy.
We're celebrating Tony Tennille's birthday today.
Really? We are? Okay.
And, you know, we had Ace on and, you know, what they're doing. And there was another woman of ability that came out of nowhere, and I was like, who is this person? It was like, literally, like, I remember this. She had a drummer. She picked him up. Sunset Boulevard. His name was Don Henley. And
not bad.
Bass player. Yeah, you can play. Glenn Fry played. It was Ronstadt with a bunch of guys.
Oh, yeah.
Linda Ronstadt to get you out. Stay tuned to Bloomberg Radio.